Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, good afternoon, good evening. How are you guys doing today? You guys excited for this live stream? I sure am. We have a lot to cover, a lot of awesome value to give today, a lot of cool updates for you all today to take advantage of. So I'm very excited for it. Today is January the 14th, 2023, Saturday. I have my coffee. As always, good morning, good morning. While we are waiting for people to trickle on in, if you guys wouldn't mind just sharing with everyone and sharing with me where you guys are from, drop some locations in the chat. Would love to see where you guys are based out of. I am just doing one more quick thing. I'm just going to be uploading the link to all of my pages. I just forgot to do that this morning. So just bear with me here. We're going to wait for people to trickle on in. Then I'm going to go over some updates, and we're going to get into some charts. We have a lot to cover, a lot of great setups, and pretty much an amazing start to the 2023 trading year. I'm going to be going over our track record as well, so you guys can keep up with that. That's really, really going to be cool to see. Oh, let's see. South Africa, Mozambique, Spokane, Washington. Good morning. Good morning. I know you're from Jersey. Hugo, how's it going? Botswana, Portugal. Love to have all the diversity around the world. California, awesome. All right. What pairs are you guys looking at this morning? Anything that strikes your attention, strikes your eye at all? Have you done any analysis yet before the start of the week? I sent the wrong link. I probably did. Whoops. I did send the wrong link. Sorry, guys. I'm not prepared this morning. Woke up late and had to quickly get all of this going. Here, let me delete that. I'm trying to find it. Who cares? Doesn't matter. Croatia, Nigeria. All right. GJ, US 30. Okay, guys, just a reminder, I don't trade US 30. I don't trade any sort of index. I don't trade commodities, stocks, cryptos. Everything is just straight Forex here. And I won't be going over anything other than Forex pairs, not even gold. I don't trade gold at all. Passed my first prop firm challenge. Nice, Hugo. Awesome. Great to hear. That's awesome to hear. Yeah, we've been having a lot of people pass prop firm challenges lately. I'm not sure if it's because of the new track record system where we enrolled to everyone, but we will see. GBP AUD. Why not indexes? Because I don't like the way they move. It's just not my personality. A lot of people think that, trading indices or stuff like gold because of the volatility is good. You do realize that the volatility is both ways. Just because you may catch 1,000 pips on one pair, you could easily hit the same amount in the opposite direction and hit your stop loss with that amount. It's all about risk to reward. It's all about percentages. So this is where a lot of people go wrong, is they think that, okay, let me trade gold, or let me trade US 30, or let me trade, something that pumps out a lot of pips. They're not thinking about it in terms of percentage return. They're thinking about it in terms of pips. So what they do is they place the same lot size every time, which naturally doesn't keep with risk management. And that's why so many people blow their accounts. It's very important to understand what you're investing in before you're investing. Trading is a way of investing. It's a way of making money. So, it's very important to understand the underlying nature of the markets. It's important to understand risk management and exactly the asset class in which you're trading, before you even start trading. Very important to do your research and obviously practice first before going live. Very important. All right, guys. So just a quick couple of updates. As you guys know, we do have our track record available for you guys. We started that in this year, actually last week. Originally last year, we did what was called audit track records. Essentially, I went through my entire VIP Discord channel and pretty much did a full audit of all of the analysis and trade ideas sent within that VIP Discord channel. I went over all the befores, all the afters, went over which ones won, which ones lost, pretty much gave a complete breakdown of everything that was sent out for the entire month. I've done that for September, November, and December. I didn't do it for October because I didn't realize how important that was until about November time. And by that time, I needed to do it for November. So I haven't had the time to go back and do it for October. But all of you guys in VIP, if you guys are thinking, oh, maybe he had a bad month in October. Actually, October was a very good month. I just haven't gotten back and haven't had the time to do it yet. So I'm planning on that at some point when I have some time. But the reason why we're switching to this sort of, transparent release is because, watching a 2-hour long audit video can be quite, stressful at times. And maybe it would be beneficial for all of you to see the exact trades, or not trades because they're not signals, but the overall ideas and the overall biases and the overall, just general analysis that we are looking for. And we're going to be putting it into one Excel file. So if you guys see at the very bottom of the screen, it says Ariel Fx live stream and VIP track record. So what I'm going to quickly do before we get started with the charts today, because we do have a lot to go over, I'm going to quickly share my screen here, and I'm going to discuss what this track record is meant for and how it works so you guys can best take advantage of it and just keep up with it the best way possible. All right, so if you guys can see my screen here and hear me properly, we have two sections. We have the live streams, which is where you guys are currently at now, and then our Ariel Fx VIP one. So I will be sending the link in here to this Excel file again. However, it should already be at the bottom of your screen, so you guys can just copy that link there within the overlay of this live session. So essentially, how this will work is we're going to be documenting everything that we discuss. These, of course, 100% are not signals. We despise signals. Signals ruin people's lives, to be quite honest with you. And it's not because the signals are poor. We used to be a signal service company and we used to do phenomenally well. However, the problem with it is not necessarily on us. It's on the trader. They simply don't follow our directions all the time. They don't understand the concept of risk management. They don't understand, the concept of longevity and sustainability and, the long-term mindset. So with all of that psychology taking into consideration for a relatively new trader, which that's why new traders take signals, is it's not the signals or the trades that are necessarily bad. It's just the psychology that comes back and haunts them because they do a couple of things wrong. Even if they follow all of the signals down to a T, they can still, their psychology gets to them. If they lose one trade, let's say they join at a time when we lose 2 or 3 trades in a row, for instance, right? Like a small losing streak. Well, they automatically have a predetermined bias on that particular signal service that, oh, these people are not good traders. But maybe they start to take the signals and they, over leverage on the next one or something like that, having no awareness of risk management or a trading plan or any of that kind. So in all reality, signals just don't work in that sense. So by all means, these are not signals. These are just pieces of analysis that we want to share with you guys that we're going over, just areas of interest that we're looking for ourselves. So we wanted to be able to provide full transparency for this so you guys are able to keep up with it and have that peace of mind within Ariel Fx as well. So essentially, We're going to be discussing the pair, obviously the longer short, the position, which direction we want that current pair to ride, active or not, the risk to reward, essentially like floating 0.7R, meaning if you risk 1%, you're up 0.7%. If you risk 2%, you're up 1.4%. If you risk 0.5%, you're up like 0.35% or something like that. Obviously, we're going to have the running total, full risk or half risk, meaning, and it's all, the legend is all up here for you guys to see. Half risk is 0.5%, full risk is 1%. That is what you guys can keep as more of a kind of a guide to your trading in terms of risk management. Are we break even yet? And obviously we have the trade link to show what the analysis is and what we're looking for. All right, so you guys can pair up what exactly we're looking for with the analysis. And obviously we have, a full graph that's going to be tracking the entire running total. So this is just for the live streams, right? So this was just from Wednesday's live stream this past week, so a few days ago, just within an hour time span. So we can't expect a million different trades to be playing out like we have within our VIP program here that we're currently sitting at 10% for the week. Now, 10% for the week, this is not one of those things where I am just guessing on the analysis. I'm literally going pip by pip in terms of the risk to reward. So if we have, for instance, I'm going to go to something like CAD Swiss franc here. If we had a 20 pip stop loss, how many pips are we exactly up at this current time, right? At the time that we're updating the spreadsheet, we may have been up a 1 to 5, but as of right now, we're floating about a little over a 1 to 2. Okay. Now, CAD Swiss franc was sitting at a 0.5% risk. Why? Because we had 2 levels. So this is not a 1 to 2 point, whatever it is, because 45.5 pips or something like that divided by 20. It's more along the lines of 1 point something percent because of the half risk. So these numbers are 100% down to the T. So these are the exact numbers in which, if you followed them step by step, this is the exact number in which you would have. Based upon our overall profit taking system, when to move stop loss to break even, where to take partials, all that stuff we do teach within our VIP program. That is not something that we are going to be providing here within this Excel file, because that's just signals, and we don't like that. That just creates dependent traders, and I guarantee you I'm not going to be around doing this forever. You're going to have to eventually learn the skill yourself. And if by the time I leave and we're not doing Ariel Fx anymore, which I don't ever plan on stopping. However, life circumstances, they change. We'll see what happens. We want you guys to be well prepared and be able to be sufficient and not dependent. So this is where we're going to be putting all the live stream trade ideas that we send out. Again, they're not signals. It's just analysis. Us just sharing our overall bias in the market. And we're going to be keeping up with it so you guys can see a full transparent breakdown. Obviously, we have our entire Ariel Fx VIP one here. So these are all the trades sent to our VIP. Are they valid? Are they not? And we're going to be keeping up with that. This is just 1 week's time, right? 1 week. And we're up 10.05%. So, obviously, we're not going to be going over all of the trade ideas sent to the VIP community here on the live streams. Live streams are just meant to kind of give an overall directional bias for the week and just give you a little bit of value here and there. Obviously, we have to save the rest of our value for that VIP community as well. So if that's something you're interested in joining and you want to be receiving all of these trade ideas, feel free to message me. I'd be happy to set you up with that. I know a lot of people want that passive income stream. At this time in life, really, especially when we're hitting a recession, especially for those of you who live in the States, times can be tough, and, different streams of income are definitely 100% necessary. It's not recommended. It's almost necessary in this day and age, or people will be, living paycheck to paycheck, which is really not what we want to see here. So you go back here. So any questions before we start? We're going to get started in the charts now. Obviously, I can't see your guys' comments while I'm going to be breaking this down. So please save your questions for the end, and I will be happy to go over that. I'm going to go over like half of the pairs, and we'll take a little bit of like a 1 or 2 minute break while I answer some questions, and then we'll get back into it. Let's see. What would be a really bad month for you? Have you had one in the last year? I think last year in the beginning of the year, I think it was like maybe January. February was a good month. I remember that. March or April, I think that was when I had a relatively bad year or bad month. And it may have been probably maybe a 5% month, maybe a little bit less. I haven't had a break-even month or a loss in like 2 years. Because it comes down to experience and it comes down to risk management and it comes down to psychology, right? So, you don't have to have the home run trade every time. If you're able to secure partials and it comes down and hits your stop loss at break even and you secure maybe 0.3 risk to reward or 0.3 R, what if you do that a couple times a month, right? That could really help you, and that will really, 0.3 times, let's say you do that 5 or 6 times a month, that's, 1.5%, close to 2%, that could help with mitigating 2 potential losses that you have. And dependent upon your overall win rate, that could be very significant. I don't know. It all comes down to numbers and it comes down to psychology and experience at the end of the day. You have to take a professional approach to trading or else it's just not going to work for you, to be quite honest with you. Let's see. Video quality is better. Yeah, good guys. That's another thing. If you guys are seeing that the video quality is not doing so well or the audio is not doing so well, please send me a message on Telegram. I'm going to try to move my mic so you guys can have it right in front. Send me a message on Telegram and I'll be happy to try to figure that out for you. All right, let's go over some pairs. All righty, let's do this. First Saturday live stream since last year. Very excited about this. So we're going to take a look at all of the pairs highlighted in red today. Okay. And if you guys have some serious questions about audio or video or clarity or whatever, just send me a message on Telegram. I have my phone right here with me. It's Ariel Fx Trading, if you guys are wondering. So overall directional bias, we understand. Actually, sorry, guys, I didn't even go over the dollar. Let me do that because I wanted to discuss that. Overall, the dollar is extremely bearish at this current time, right? I know I'm looking at the US dollar. I'm not looking at the DXY. Some of you are looking at the DXY. They're pretty much the same. However, with the DXY, there is a clear area of higher time frame, I guess you can call it supply. I don't know if it's going to be showing here. I'm not sure how much price feed the US dollar actually gives. Yeah, it doesn't give that much, right? So I think there's some sort of area of supply here on the DXY that we actually ran into very nicely. So with that being said, we have reacted quite strongly from that higher time frame level. Yes, we do have relatively equal highs, but I'm really not even concerned about that. I'm not going to try to confuse you with that right now. We're moving significantly against this, right? Higher time frame, we're extremely bearish. We want to be continuing to look for shorts on the US dollar. Now, I don't trade the US dollar by itself. I just use this as just a general bias for my dollar-based pairs. But the most important thing, guys, and the biggest piece of advice when looking at the DXY or the US dollar is not to, when you're going down to like the 5-minute time frame or the 10-minute time frame on, like, let's just say Euro USD, which I'll show you a trade that we actually did take this past week. You wouldn't most likely go to the US dollar, the DXY, to look for confirmation for that Euro USD trade, because what's going to tell you whether or not a trade idea or a piece of analysis is going to work out on Euro USD is Euro USD itself, right? So we just look at the US dollar here in the DXY for general higher time frame bias. Where are we most likely to head for the week, for the month? Just overall biases, so we can create some sort of bias on all the other US dollar based pairs. So with that being said, higher time frame, daily time frame is an extremely sharp decline, downtrend. What we've been experiencing over the past couple of weeks is this huge push. And I think this was NFP, I believe, was used as the excuse to drive price lower. Notice how we come into this trend line 1, 2, 3 times, almost 4 times, just, wasn't the clearest trend line, but 3 times here. And then we ran the liquidity. So prior to, and this is, again, you can see at the bottom of the screen, it says Thursday, January 5th, 2023, 9 o'clock, right? If I move the cursor over, it changes the time. Obviously, you guys have probably seen that before. This was NFP right there. That exact price bar was Friday, January 6th, 8 o'clock in the morning. So we've already mitigated this area of supply. We've made a lower low, we've made a lower high, we've made a lower low. Okay, so this is the prior high that created this low. All of this is just an overall pullback to continue short, right? This is just an extended pullback up into our previous swing point. So what do? Well, prior to NFP, we create all of this liquidity. We're pricing this data into the market. Okay, so we're going to be running buy-side liquidity. So prior to NFP, we come up and run the liquidity. We mitigate that level. And the excuse is to drive price lower. That's why we see such a huge decline in value within the US dollar, creating a huge push up on XXX USD pairs. So AUD USD, NZD USD, Euro USD, GBP USD, so on and so forth, right? So news is not random. It wasn't just a random move where we just went short. It was pre-planned. We already knew that price was going to run this liquidity and react from this level, or at least the institutions did. They knew they were going to be taking price low or lower after coming into this specific price point around 12,986, right? So they already knew what was going to happen, and they were just waiting for news to be used as the excuse to, bring in the volatility in the market. So we can see while that volatility was being created, we had a little bit of a repricing event right in there. And we discussed repricing events within our VIP program as well. I'm not going to go over it today. It'll just take me too long to explain it. But anyways, we continue short, right? Creating a crazy imbalance that has yet to have been filled, right? So I wouldn't be surprised if we had an overall pullback into that sort of level to then continue, right? I'm not expecting price to start the week off by pulling back. I don't know what's going to happen with the US dollar. What I can assume, just based upon pure price action, is the fact that, one, we are extremely bearish. So why wouldn't we naturally expect further weakness on the US dollar, right? If price ends up pulling back, if we end up going like this, then this would be an area of interest in which I would look for price to react from to take short. Now, obviously, I'm not going to be trading this, but we can pair this area of interest with other areas of interest on the dollar-based pairs. So if the dollar comes up into this level, then we could have an understanding of where the XXX USD pairs could come into before continuing to rise. And we have those levels, and I'm going to be talking about those today. So overall, dollar is extremely bearish. All right, so let's get into the actual currency pairs. So with that being said, we are on a huge uptrend on AUD USD. So first and foremost, where is our current trend and where is our overall objective? So this is very important in determining whether or not you should be trading within the current trend or looking for reversals. Okay, so currently the trend is to the upside, right? We can clearly see that. Are we going up or are we going down, right? Even a monkey could say we're going up, right? I mean, it's just plain as day. It's just, we have to sometimes just use common sense in our trading as well, right? Sometimes it's just appropriate to say, okay, are we bullish or are we bearish? Okay, we shouldn't be looking for shorts. Simple as that. So if we zoom out here, we can see that clearly we still are in an overall downtrend. Lower low, lower high, lower low, lower high, lower low. This is our most recent swing point. However, we have come into a level of demand on the higher time frame. And we can see that when we had this crazy sell-off with COVID last year, sell to buy, we had that repricing and then the higher high. So that created the demand, and we came into that level very nicely. And across the board, pound USD created all-time lows. Euro USD had created lows, I wouldn't say all-time lows, but they were lows of the past like 5 or 10 years or something like that. I had to have to go back and look. But anyways, this could be the catalyst to push price really long. So I'm going to continue to trade AUD USD and pretty much all the other dollar-based pairs long until proven otherwise. I'm not going to be looking to trade off of these levels. I'm not sure as heck not going to be placing sell limits at these levels because, for one, these are just intra-trend, swing points, right? This is the overall, lower low, lower high, lower low. So if we're going to go short, we would have some sort of overall pullback in another leg. But I don't really expect that right now. And I have no clue if that's going to happen. What is price telling me at this current time? We're bullish. So continue to buy AUD USD. Okay. So within this, we have obviously lower time frame swing points that we can take advantage of. Now, I didn't see this in time because this was a time that we were not trading, right? The beginning of the year, we always take the first week of January off to let the market settle in and, to let it do its thing. So what happened was, a higher high, a higher low, we just swept liquidity. In all reality, this is one swing point, one expansion, one pullback, one expansion. Okay. So we swept liquidity here, and then we made a move back to the upside. We repriced and we continued. So we had that overall pullback into that level of demand. You could have easily taken a buy from that level, and then we made a higher high. In the process of mitigating this area of demand, we had a reaction from it. We repriced. We failed to generate a lower low here, right, within this counter trend. And then we decided to stop and make a higher high. So that will turn into demand for us. Okay, so I'm looking at 6,790 for one level. We also have 6,800, it's just a psychological level right above it. We have some sell side liquidity, and this is really good for higher time frame retracement. So I don't expect price to pull back into it now. I mean, if it does, great, we can take longs from that level. However, what's also nice to see is a trend to the upside here, something like this, because what this does is this creates liquidity for a higher time frame retracement, sweeping sell side liquidity to then take price long. So we understand that as institutional traders, or I should say, more smart money traders, that we have to build liquidity prior to coming into levels, because how does price move? Price can't just move without liquidity. It's impossible to be done. For every buyer, there has to be a seller, right? So there has to be sufficient liquidity here for the institutions to take price this long or this fast, right? So how do we do that? Well, we have to generate liquidity prior to coming into levels. So if we're going to react strongly off of that level, we need to be able, or the institutions need to be able to place all of their buy orders at that particular level. Now, how do they do that? How do they place hundreds of thousands to potentially millions of contracts or lot sizes at that particular level? If they're buying, then they need that exact same volume on the other side of the market. Someone needs to be selling, right? So what they do is they create liquidity in the form of trend lines, in the form of support, resistance, whatever, to entice retail traders to take a position to build sufficient liquidity so that they can free up that liquidity to then use to their advantage so they can buy the market. Meaning, if everyone is buying at support, and you guys should already kind of know this, you guys are buying at support, where are they placing their stop loss? Right below it. What is a stop loss? A stop loss is a place, obviously, where you get out of the market, right? But if you are buying at support, you are pretty much telling the market, I am okay with selling my position back to the market if price reaches this specific level, aka your stop loss, because you don't want price to continue to move against you, or that's what retail thinks. So, and obviously, guys, stop losses are 100% important. Okay, don't misconstrue my words to say, oh, well, just don't use a stop loss. No, you need a stop loss for every trade. It's 100% imperative. However, what I'm trying to say is when people are buying at support, they have to sell their trade back to the market at that particular price to get out of their position, which results in that loss on their trading account, right? Vice versa, if they're selling and price goes higher and hits their stop loss, they are forced to buy back their position at a higher price, which results in that loss, right? So when they're selling their position back to the market here, they're essentially allowing buy side liquidity to come into the market, because if the institutions want to be buying here, they need someone on the other side of the market to sell. So they create sell side liquidity to where when price runs that liquidity, they're forced to sell back their position to the market. So now institutions can buy from them. They're literally buying from the retail traders, essentially. They're taking their liquidity and stuff like that. So continuing higher, that's what we would naturally expect. So with that being said, I want an overall pullback at some point. And let me go down to a lower time frame. Let's see here. When we had that CPI news come out, all right, we had that CPI news come out. We had a clear liquidity run here. Clear liquidity run, higher high, and we stopped. We formed that higher low. Then we created a higher high. So naturally, we would expect a higher low for continuation to the upside. So that was sort of our little lower time frame demand. It wasn't very clear, but that's what occurred, and that's what formed. And in the process, we created equal lows to come and run, right? We created that liquidity, and we pushed to the upside. And now what we do is what we're looking for a higher high for a higher low, right? We're just continuing with the overall strength of the market. Okay, dollar is extremely weak at the moment. So let's look at the counter trend. We have a lower low, a lower high, a lower low, a lower high, right? This lower high pretty much came into this supply level to some degree. And then we failed to make a lower low, and we're making higher highs now. So what I really want to see, and this is where we just have to scale out a little bit. Let me go to the 1 hour time frame. All right. If we make a higher high, obviously I'm not going to be trading until at least New York session on Monday morning, right? So if price comes into this level before Monday morning, oh well, there's no trade. I'm not going to force that. Also, even if Monday morning rolls around and we go like this first and then go like that, I'm still not going to be taking this trade because I want to see a higher high form first, a clear higher high, and then we can see the higher low into this level of demand to continue long. So that's more of a short-term intraday trade that we could take advantage of. However, I am just, if that doesn't work out, I'm just going to be sitting on my hands until another setup arises, or if we get an overall pullback back down into our higher time frame demand down in here. So these two levels are definitely very important. Or overall targets. And this is where we can be setting our partial profits. Now, how do we set partial profits? Now, we do talk about this in our VIP. I also talk about it in our YouTube videos that I have within my personal YouTube and the videos that I post on the Trading Nut Community YouTube channel. So essentially how I take partials is I look for areas of interest that could potentially reverse against me. So if I'm buying, where could the market reverse and start to sell off? Well, in that case, we just look left. And we look at the overall structure. We can look at areas of supply and just look at maybe specific sponsor candles that could react from imbalances. So in this case, there has a potential that price could react here and go short. I'm not saying it's going to go short, and I'm not going to be selling it there, but that's a potential. So that's where I would be looking to take my partials right here. Okay. Partial here, maybe a partial here, maybe a partial here. And that would produce probably a very good risk to reward for me. All right. So that's kind of what I would be looking for on AUD/USD. Now, I did speak a lot about, structure. I did speak a lot about higher time frame. I did speak a lot about objective. I did speak a lot about, partial profit. So what I'm going to do really quickly is I'm going to stop sharing and I'm going to answer any questions you have about that. Anything that you guys have that maybe is a little confusing before I divulge deeper into the other pairs. All right. Ooh. Let's see. Yes, all these are recorded, guys, for sure. Let's see. Any questions specifically about that? ICT is scamming you. Man, you guys are... I've never watched an ICT video in my life. All right, so if people are going to act like that, you're going to get out of here. Cool. So I'm very strict in my approach to trading, and I'm very strict in my mentorship as well. That's why I produce a lot of successful traders. So I'm going to try to say this as kindly as possible. If you guys start talking about, oh, I'm ICT or anything like that, you're gone. I'm done. Not going to deal with it today. All right. I've never watched an ICT video in my life. I've learned from an institutional trader for over 20 years. I have gone through hell. I have failed for so long. And when people come and say that, it just ticks me off. So we're not going to deal with that today. All right. Sorry, guys. Continuing here. That one's gone. He's gone. He's out of here. When the market comes into your zone, what do you look for to enter? So normally, if I'm just trading in my overall direction of trend, I'm just setting buy or sell limits, right? So you can look for confirmation in the sense like when price, and this is probably better if I just share my screen here. For instance, if we're looking for potential sells from this level, let's just say we are. Well, obviously, you don't always have to set sell limits. I mean, you can. And the same thing goes for something like this buy region or these buy regions. You can be setting buy or sell limits wherever you want. However, if you want more confirmation, then what you can be doing is looking for potential, a slowdown in price and then a lower time frame break of structure. If you see the slowdown in price, maybe it could be some sort of distribution schematics. You could be looking for divergence. So what I use is the VFI indicator. So if I click on VFI, we could do is simply, look to see is with prices rising, maybe volume is falling. That would indicate some sort of reversal. And for the sake of time, I'm not going to discuss, what that exactly means. I've discussed it plenty of times before in other videos. But that's something that you could look for as well. Really, it's just a shift in momentum in the opposite direction and a reaction from your level and a break of counter trend structure that way. Okay. However, here is a really, really good piece of advice that really helped me out. So when traders are only looking for confirmation, let's say price comes into this level and price just goes like this and there's no confirmation. So they don't get into the trade and they don't place their trade. But they see that that price has come into their original level and the trade has already worked out for them. What they do is they have FOMO, right? They try to chase the trade. Oh, they're waiting for pullbacks in here. They don't get it. They're waiting for pullbacks in here. They don't get it. They're waiting for price to pull back. They don't get it. So now they're stuck in a predicament. They're like, okay, do I just move on to the next trade or do I get into the, do I have FOMO and chase the trade and enter like right here for a buy? Most of the time, because people are just ignorant and traders don't really have the best psychology, no matter how good they understand the trading components, they'll look to buy in here. And then price could potentially pull back. Who knows? They get scared and then they get out because they're seeing huge drawdown because they're getting in because they're just ridiculously stupid. And then price continues to rise, right? So in all reality, this would be an overall higher high, higher low, higher high. And that's what we could start to see occur. Hindsight's 2020. If you're back testing, you could easily see this and you could be taking trades off of this, off of this, off of this, no problem. But when it's real time and you don't place a buy limit here and you are catching, you're trying to chase the trade because there's no immediate pullback, then, it just sets yourself up for failure. So that's why psychology is so important. But how we can, kind of mitigate that is we can take a different approach. We can place maybe half risk positions at these levels. So, heck, if you think the market's going to go short from that level, place a half risk position. And if price comes back up into it and just absolutely dies, well, at least you're in the market. So we can't, really confirm and wait for a pullback, lower time frame to trade it. But at the same time, if it just blitzes right through it, well, then at least you only lost 0.5% maybe. So I would recommend doing both. Kind of waiting for lower time frame confirmations as well as setting your buy or sell limits. Now, this is like a 15-minute, 10-minute, 5-minute level. You don't want to always wait for confirmation for every single trade. And this is just where it gets sort of intuitive in a sense. Like sometimes it's very hard for me to explain why you wouldn't look for confirmation at times. But if you want to keep it rule-based, half risk as a buy or sell limit in your areas of interest, and then scale in for lower time frame confirmations upon lower time frame breaks of structure. I guess that's what you could probably do. All right, let's continue here, guys. We have a lot to go over. CAD Swiss franc. So we had a beautiful trade from this level. This was actually discussed a couple weeks ago. If you took this trade, congratulations. We have equal highs. I do think that we can come higher. Overall, we are extremely bullish at this current price. 1 drive, 2 drive, 3 drive. I'm really looking for continuations to the upside, at least until probably 0.707. Right? We have accumulated. We have swept equal lows, sell to buy, repriced into an area of demand, and then continued higher. And then simply what happened after that was when we created the higher high and we failed to make a higher low and then made another higher high, that signified to me, okay, the trend is starting to shift to the upside. Either we're going to go long or this is just some sort of overall pullback in the market. We've accumulated in price and we have formed our counter trend areas of demand or repricing events. So counter trend low, high, low, high, low, high, this area of demand in here, or originally it was supply because this is supply. We've reacted from that level. We have failed to generate a lower low and instead we have made a higher high. So that was our repricing event. We flipped from supply to demand. So we had 2 levels in this case, 1 and 2, and we only reacted off of our first one. All right, so that was a half risk position. And we're currently floating this one at the current time. CAD Chef floating 1.15 R. Okay, so not terrible. Really not bad at all. Okay, in terms of additional positions, I would be interested in still maintaining this as a position because one, we haven't come into it yet. 2, I would maybe classify this as a head and shoulders. Shoulder head, shoulder. Retail is, if price comes back down into here, retail may look to see this as, break below the neckline, and then they'll sell it here, and then we can then look to buy it. However, if we take a look at the higher time frame, this is where top-down analysis is very important. We've come into the daily 50 EMA. We still are extremely bearish overall. CAD is really weak at the moment. So I wouldn't be surprised if we ended up making a lower low. So we have to take that into consideration here. So what I would recommend because of that is simply just to look for breaks of structure and reactions from our levels, whether that be right here or whether that be right down in here in that other box, right? We could either see a reaction and a pullback and we continue, right? And then we get in right there, or we see something like this to where, we create the counter trend. Maybe we create more support here, reaction, sell to buy into that level, and then the counter trend break, and then we can pull back to mitigate and go long. That's what I would be looking for. I'm not going to force this. My stop is already at break even here. I've already taken partials above the previous swing point high, so I'm good to go. I'm not risking anything else, and I'm going to just be waiting for more confirmation for additional positions. So the levels of interest I'm looking at, waiting for confirmation, is that, and then this blue box down in there, that area of demand. Okay, so that's CAD Swiss franc. That's my overall bias there. Euro AUD. So with Euro AUD, if we go to the higher time frame here, let's check out the daily first. With the daily time frame, we can see that we are clearly bearish. Lower low, lower high, lower low, lower high. We had a higher high, a higher low, a higher high that swept liquidity here, and then we finally made that overall lower low. We can see we had a push, we had that liquidity run to the left, and then we started to make that overall pullback to the upside. So just simply put, guys, it's simple. Low, high, low, high. It's that easy. So when we're looking for overall pullbacks, if we're in this uptrend on a lower time frame, you may not even think that we're overall bearish because you're just looking at lower time frames. So you're just continuing to buy, which is fine, but you have to understand higher time frame objective. Where are we likely to come into before potentially reversing? And that's this area of supply in here. So we can see higher high, higher low, demand, higher high, higher low, demand, higher high, higher low, demand, higher high, higher low, demand. Oh, no, we failed to make a higher high and we make an overall lower low. So that will flip from demand to supply. So we had that region drawn out for quite some time, and it's better seen on the lower time frames. I'm just on the daily time frame to make it easy. But if we scroll over here, we have clearly come into that level of higher time frame supply, and we're reacting from it very nicely. So currently, we are definitely bearish. We're making lower lows and lower highs. So I'm going to be continuing to look for shorts. However, where is a possibility that price could potentially reverse and go long? Well, we are still technically bullish within this counter trend, high, low, high, potential higher low for a higher high, definitely. We've sort of accumulated here. We can see equal lows that were swept, sell to buy. This overall sell to buy failed to generate a lower low within this overall pullback, right? So that's where we stopped and then started to make our higher highs and higher lows again. So we actually have an area of imbalance right there. So I think that if we are to go long, and I'm not saying we're going to, if we are to go long, I really think we need to come into this imbalance first. We haven't done that yet. So with that being said, if we need to come lower and we're counter trend bearish, that's really good confirmation and good conviction that we are to probably continue to head lower, right? Because the lower time frame is bearish, which just is one confluence, but then the higher time frame objective hasn't been met yet. So now we have more room to go to the downside. So any excuse to be looking to sell this would be valid in my opinion. So we actually are in this position right now. We called this out earlier. We can see that this is our most recent area of supply. It's just higher time frame supply right there. We just failed to come into it here by a few pips, but we finally rallied back up again. And now we're looking to take this short. So we are in a little bit of profit at the current time. I don't think we're in much because this isn't a big risk to reward because we also have another one here. Let me see what it is just for transparent purposes. What was that? Euro AUD. Where is it? Euro AUD short. Yeah, but floating a little less than 0.5%, which we just started this trade anyways. So we are looking to take profit 5,350. And then we'll just be looking for potential longs. I'm not going to be setting buy limits here, but I'll look for, confirmations and maybe reversals back to the upside for potential longs to continue with the lower time frame trend. However, we can see that this probably is not a high in the market, right? Usually when we have a high in the market, we usually sweep liquidity very strongly and then continue, right? Because we have to generate liquidity prior to making large moves like this. So within this higher time frame, within this higher time frame supply, we have a lower time frame supply right in here with all this imbalance that needs to be filled. So I think that price has the potential, and so why I have two different levels here, and I shouldn't really be having this risk to reward, but I guess I just forgot to delete it before the live session, is if we have an overall retracement, sweep all this buy side liquidity, come into this supply level, we could easily see a reaction back down into that overall demand or overall higher time frame imbalance. So that's what I'll be looking for this week. I'm looking for Euro AUD to take a nosedive to the downside. Same with Euro NZD potentially. And this is where it gets a little tricky because Euro NZD is quite bullish at the moment. We still are holding our positions from last year, mid-December last year. We got into this Euro NZD long. So I'm break even on this. So if price obviously comes down, break even, I've already taken partials, whatever, but we're just holding for more of a long-term swing back up into 1.77, which happens to be a higher time frame supply. Why is this supply? Well, if I just scale out, we can see that we've had, higher highs, higher lows, higher highs, higher lows. We failed to make a higher high here, and that's where we started, the lower lows, lower highs. So could this be just an overall retracement for a continuation short? Could we be bearish now? Potentially. I mean, we kind of are bearish in a sense. But right now, we're currently bullish, right? We're making higher highs, higher lows. So where is that most likely to stop? Probably this level of supply right in here. So we had a high, we had a low, we had a high, we had a low. This is an area of demand that we have reacted from. However, this demand is invalid because, well, it wasn't invalid at the time. It invalidated itself because we failed to make a higher high within this overall trend, right? We stopped and made the lower low. So this will turn into supply, this entire area. But where we can refine that, where is our last buy to sell volume? Really, this entire buy to sell volume is that last buying volume to sell off that actually came into this lower time frame supply in here, filled the imbalance very nicely. So that's where we're looking for price to head, 1.77 psychological level. And then within the drives of the market, we can see one drive, pull back, two drive, pull back, looking for that third drive into the high. Okay, so that's what we're going to be looking for. 1.77 for any buying that we do is going to be targeted at that level. However, actually, let me go back to the daily. This is why it's a little bit tricky. Could price come lower before it comes higher? Yeah, potentially, because this is the high that generated this low, and this is the low that generated this high. So technically, this is the entire range. We can be trading 99.9% of the range and still maintain our bullish structure. From a technical standpoint, we could actually do that. So where was the counter trend of this pullback broken before we made a higher high? Well, we have a low, a high, a low, high, low, high. This is supply. Came into supply, had the reaction, failed to make the lower low, and that's where we started the uptrend. So this is the start of that supply to demand flip. We haven't come into that yet. So there is a potential that we do something like this. Low, pullback, like something like this, and then we make a move to the upside. This would just be an overall pullback or a lower time frame trend to come into our overall objective before then rising to the upside into our higher time frame supply. Right? It's just following market structure very precisely. So with that being said, we haven't really come down into that level. So we just have to be careful. But we are still technically bullish on this time frame. We're making higher highs and higher lows. So with that being said, we can just take that and run with it. High, low, high, low, high. We could come down into this imbalance, low, and then make a higher high again. So I will be looking for 1.68 or 1.6742 to be taking longs because we might as well just continue to trade with the current direction of trend. This is a higher high. This is just an overall pullback, higher low. This is a higher high because obviously we closed below our previous swing point. And now we're looking for overall pullbacks to sweep sell side liquidity. And we can probably see this is probably a trend line, guys. Yeah, some sort of trend line. Right, so people are buying off this trend line. Hopefully we'll go run that liquidity, come into 1.68 psychological level. This is the start of the last selling volume, and then our lower time frame demand down here. filling up all this imbalance. That's what we could see. However, remember I said that we are currently looking to sell Euro AUD, but this is Euro NZD. So what could happen if Euro AUD is going to push higher before selling off into that imbalance, as we just talked about? Could Euro NZD push a little higher, maybe into 1.706 before selling off here? 1.0760 is sort of an area of supply here. You can see that wick creates the huge buy to sell. That wick came into this area of supply here. And we can see the mitigation train, right? Liquidity run, buy to sell, lower low, pull back, lower high, came into that supply. Counter trend, high, low, failed to make a higher high, lower low. That turns into supply. We can refine that just by this supply right there. That's exactly where we mitigated over to the right. Lower low, overall pullback, lower high. Lower low, down in here. I can just zoom out. Lower low, overall pullback, lower high. Potentially. I'm not going to be placing a sell limit here, but I'll be waiting for potential, confirmation to be looking to sell. So this could be a hedge opportunity. Could look to potentially sell this because we're looking for sells on Euro AUD, right? For continuations at least into 5,350. So if that's going to be the case with Euro NZD as well, because they're correlated and they'll probably follow suit, we could be looking to potentially sell with Euro AUD as well. But we are still bullish on Euro NZD, so I am looking to buy at those specific regions. Euro GBP. The only thing I really want to talk about here on Euro GBP, higher time frame objective. So overall, we are definitely bullish. Right, we're making higher highs, higher lows. So overall, we're continuing to push higher. Again, if price is going to stop against us, right? If we're looking to buy, we always have to ask the question of where could price stop and reverse trend? And I'm not saying it's going to, but this is an area of supply in here. We have imbalance. It's just that redistribution before the expansion downwards. So that is definitely an area of supply. With that being said, we will be looking to buy up into that level. We haven't reached the objective yet, so the current trend is still definitely bullish. High, low, just looking for continuations. So if we scale into this, what do we notice? Well, we swept equal lows here. This support was swept clearly with this sell to buy candle, creating that sponsored move. 4 in the morning, Eastern Standard Time, Monday, January 9th, prime London session open. Then we continued for the rest of the week. So that is definitely an area I will be looking to buy from if price has that overall pullback. I will definitely be looking to buy from that level. Okay. You can also see this shoulder, head, shoulder. Retail was selling below the neckline because that's what they're taught to do. So they sell and then institutions buy. That creates the sell to buy. However, I said on Wednesday's live session, I mentioned that we could see lower time frame continuations just like this. Now, at the time of the live session, it was like right in here, I think, like something like that. So I said that if price is if we're going to get in a position here, we have to be patient and wait for lower time frame confirmation. So, we have our higher time frame level. If we don't come into this level, then we're going to either be sitting on our hands or waiting for, a potential lower time frame setup to form. And what I mean by this, and I said this verbatim on the Wednesday's live session, I said there's really nothing in here to play off of. All this lower time frame crap, there's really nothing to play off of. The only way I would look to continue to trade with this lower time frame trend is if we formed liquidity. If we took that liquidity into a level of demand like this, we made a move back to the upside, breaking counter trend structure. We pulled back, mitigated, and went long. And that's exactly what happened. I wasn't expecting this to happen, but because it happened, I'm able to take advantage of it. And that's just what I look for. We have our higher time frame levels. So if a setup never formed, I would just wait for price to either pull back into it or just continue to go long, and then we'll just deem it invalid at some other time, right? And I just wait to see, intraday opportunities. So in this example here, we swept a low, right? We've created equal highs. So we swept the low, sell to buy. We came into that level of demand, continuing with the market structure. And then if I scale into a lower time frame, maybe go down to the 5-minute, this is where the setup formed. So we had our sell to buy into demand, repriced continuation, broke the counter trend structure. because we had low, high, low, high, low, higher high. Okay. So now what do? We just pull back into that repricing demand and then continue long. That's exactly what happened. In addition, after creating that higher high, we pulled back into this level of demand, because remember when we bought it from this demand here, we created so much imbalance. We created equal lows. We came into that level 886 to the T, and then we made a move to the upside. And I said within my Discord community, I'm like, this is Friday, guys. Market's about to close. I don't want to really be involved as much. I don't want to take on unnecessary risk. So I'm going to move stop to break even to protect my position. Normally, I would move stop when price gets above the previous swing point. But in this case, since it was Friday, and, you know, pound is still very strong across the board, even though Euro GBP is still pushing up. I wanted to just secure my position. So I went break even on this trade and break even on this trade. I didn't take partials on this trade, so I didn't make any money on this because it came down and hit break even. But when we hit break even on this particular trade here, I did make money because we took partials at the previous swing high over here when price came up into that level. So I did make a little bit of money. However, you know, price just never continued for me. Now, I do fully expect us to continue to push higher. I want this higher time frame supply. So let's see the current structure. You know, high, low, high, low, high, low, high, right? So this is currently the range. So what I'll be looking for, and I don't know if this is going to happen, and I'm not going to be buying from that level. This is an area of imbalance down here. But if price were to, you know, go like this, then and break the counter trend structure, maybe sweep liquidity, come into that imbalance and maintain our higher time frame structure here, then maybe I can look to pull back, mitigate, and go long to continue with, you know, the lower time frame trend here. If not, and if price ends up pulling back all the way, then we have 87937 to look for buys, which is that higher time frame sell to buy. So we can be trading higher time frame and lower time frame, right? Let's see. Continuing here, Euro JPY. Euro JPY is a little interesting. So let's see, how many pairs have I gone over? 1, 2, 3, 4, 5, 6. Have a lot left. All right, I'm going to go over just a few more and we're going to take some questions and then we'll continue. So with Euro JPY, it's very interesting. I want 150, right? 150 is a previous level of liquidity. This previous high, I think we're going to run out. I mean, we're overall bullish, as we can see. Higher high, higher low, and then lower time frame trend, high, low, high, low, high. I think we're going to run that liquidity. So 150 is definitely the target. But within this lower time frame, we also have swings. And I know that this is blurry. I'm just zoomed out. I want to show you the bigger picture. We have a high, we have a low, liquidity run there. We have a high, we have a low, liquidity run here. We have a high, we have a low, we have another high, and we have an equal low. So it's very tricky at the moment because we are currently in a counter trend downtrend. Would I be looking for shorting opportunities at this level of supply? Potentially, because we have equal highs that we could run. So there's liquidity resting above it. We're in a counter trend downtrend. We have equal lows. We've swept liquidity here to the upside, huge buy to sell, reprice, continue. Or we can just say that we failed to generate a higher high here. High, low, high, low, high, low. Failed to make a higher high, lower low. Okay. So that is that level of supply I'm looking to take a trade from. And we can see when we swept liquidity here, big buy to sell, we came in, filled the imbalance. So that's definitely a level I'm looking to sell from. However, we're overall bullish. And if I go to the daily time frame, could we look at this as more of a retail head and shoulders to where price sells off into this demand to maintain our bullish structure here, fakes out the retail traders because they're looking to go short below the neckline, come into the demand, and then move higher. That is also a potential. So with that being said, I'm going to look for reactions from this demand zone down in here. If we get it, great. We can be looking to take it long because we still are definitely bullish. However, I still might hedge my position at this level of supply because this is a beautiful level of supply here, 143.86. So this is, this is a definitely higher time frame. So I don't know if this is going to play out this week, but I just want to make you aware of the levels in which we're looking for. If price ends up breaking, does this mean we're bearish? Absolutely not. We have to understand the higher time frames, guys. Just because we break and close below structure doesn't mean we're bearish. Now, if we're overall bearish and we break to the downside, then of course we should be continuing short. But if the higher time frame, higher than what we're currently looking at is actually bullish, then we have to be treating any breaks of structure lower time frame as excuses for an overall pullback. And we can see clearly here, high, low, demand, high, low, demand, high, low, demand. Why is that demand? Why is that a valid level? Because in all reality, yes, these are individual swing points. However, this is the low that generated this overall high. So this could be an overall pullback and we could still maintain bullish structure into 150. So let's scale in to the daily time frame and look at that really quick. Prior to coming into this level of demand, let me get rid of all this markup here. Here we go. Prior to coming into this level of demand here, and the reason why this is demand, guys, simply put, I mean, we've created a high, we've created a low. That's the last selling volume before another higher high is formed. We have a low, high, failed to make a lower low, higher high, mitigating that demand. So once that higher high has been formed, that's the demand in which you can take a trade from that for a buy. So prior to coming into that level, and we can see we're pushing very strongly into that level. So when I talk about the law of effort, I don't mean that when we're pushing into a level strongly that the law of effort says we should stay away. What I mean is the overall direction of trend, meaning like this is a very strong impulsive move. This is a very weak retracement, meaning the law of effort is definitely to the upside. If it takes so long for price to pull back, but super quick for price to push up, most likely that the big buyers in the market are still overtaking the sellers. That's what I mean by the law of effort. The law of effort is not meant to say, oh, if we're pushing strongly into a level that we shouldn't be taking it. That's actually a good thing. The stronger the push into a level, probably the more faster the retracement, because you have to sweep liquidity very quickly, mitigate a level, and then continue, right? So we swept these equal lows here, sell to buy, and we can see that repricing right there. Repricing continuation. So that's that level of demand in which if we get an overall retracement, I would definitely be looking to buy from that level. But we're still maintaining bullish structure here, so we'll just have to wait and see if we react from that demand. So hopefully you guys understand what I'm saying there. If you guys have any questions, just save them for the end. I'll answer them, or you can message me personally. Euro USD. So we have come into a higher time frame level on EU. Why 9595? So if we scale out, this is the weekly time frame. This is the weekly trend. From 1985, we have made a higher high, a higher low, a higher high, and a higher low on the weekly time frame. What is this telling us? Well, we're overall bullish, right? Where is our last selling volume? Where did the overall pullback fail? That's what you should ask yourself. Where did the overall pullback fail to generate a lower low again? Right? We made a lower low, lower high, failed to make a lower low, kind of consolidated a little bit, again, failed to make a lower low, and then we expanded higher high. So these two levels of demand are where I was looking to look for reactions from. And we came into the first one very strongly, and we haven't had a significant bearish week in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, almost like 20 weeks, right? A good chunk of the year, back since September of last year. So I think that, we're definitely looking to continue to rise. I don't expect any downside anytime soon. Sure, we could see overall pullbacks, but I'm not expecting price to come lower than this low. I'm really not. And if it does, then we'll be looking for buys from that level 93320. Okay. If price is going to go short, and again, you have to ask yourself the question, if price is going to go short, where would that be? Well, just look at the previous supply zone. This is the last buy volume that failed to generate a higher high within this pullback sequence that ended up making the lower low. So 1.17 is where I'd be taking profit on buys. Also because that's the exact level in which we mitigated a prior supply zone right there. So I will look to definitely attack 1.17, but this is more of a long-term swing. If price has an overall retracement, I'm not treating this as a break of structure to pull back to short. Now you can short it counter trend into higher time frame objective, which is right here. But I wouldn't look to short it any further because you have to understand higher time frame structure as well. Let's see. Low, high, low, high, low, high, low, high. We failed to make a lower low, higher high. And now we're trading with the trend there. And everything in here has been mitigated essentially. I mean, we've been trading in here for the past couple of months. Remember, we took a trade from this level right here, if you guys recall, that imbalance, because we had the equal lows. We failed to generate a lower low in the market, and this is where the trend started to shift. We've created a higher high. That was our first higher high in probably years, right? From the higher time frame swing perspective. So shoulder, head, shoulder, neckline, run the liquidity. You can see with that wick, creating that sell to buy, higher high, just simple mitigation continuation. And then at that point, this was the time in which we created a lot of imbalance. We can just see crazy imbalance in here. Everything else really has been accounted for except for 1.0090. So if we get an overall pullback, that would probably be very sufficient for a pullback. And let's just say it starts to pull back right now. That would be in discount. So I would be okay with looking for buys at that level. But we don't have to wait for higher time frame retracements. They'll come eventually, but we can still trade with the lower time frame all the way up. Right. And we've been doing that for quite some time here. We've been taking a lot of trades in here over the past couple of months. So what I'm looking for now is, we can see this is just an overall pullback and this is a higher high. So eventually, if we start a downtrend lower time frame, then this will be the level in which we look to take price from. So 1.0580 and then 1.05450 imbalance. And then we have that demand down there. Okay, so that's where I'll be looking to take price long. However, that may not happen for weeks or even months. We could easily just continue with this trend to the upside and continue to look for buys because the dollar is extremely weak. So what did we look for? Well, we had that CPI news come out on Thursday, sell to buy, and then we failed to make a lower low, and then instead we continued with the structure higher high, right? So there was a level of, 5-minute time frame. I think I discussed this earlier, or maybe it was on AUD USD, I'm not sure. But that level of demand, I had that marked off. Didn't send it just because it wasn't that pretty enough to send as a trade idea. But anyways, we had a reaction from it, and we broke the counter trend. Low, high, low, high, low, high, failed to make a lower low, higher high. This repricing event came into the supply. We failed to generate a lower low within this counter trend, right? And instead we flipped, and we made a higher high. So that tells me supply flipped to demand. We can take that trade there. And this is also, a really good trade because not only is this a supply to demand flip, but when we had our last selling volume before the higher high, it did come and mitigate something to the left. So that also is an additional confluence. So we did take that trade, and we're currently up on that, I think, floating 1R. Yeah, so 1-to-1, not too bad. And we will continue to hold that trade. So I don't see anything at the current time for re-entries. The only thing I see is if we get an overall pullback, then these two levels are definitely valid. All right, I'm going to go over one more, and then I'm going to answer some questions, and we'll continue with the rest. So with Euro CAD, we have a couple of options. We have a beautiful lower time frame opportunity, but we also have a nice higher time frame opportunity. Where are we going? Long or short? Like I said before, even, a 5-year-old kid could probably say, we're going long, definitely. We're bullish. We want to be looking to continue to buy lower and higher time frame. So our previous liquidity, like our higher time frame liquidity, is set at essentially 1.46, that previous swing high. So I do think we're going to run that high. In the process of this pullback, we've created, this trend line: 1 touch, 2 touch, 3 touch. Retail takes it off the 3rd touch. You can see that they're buying in here with that green candle, right? Enticing buyers. And then we run the liquidity, and now we can continue with the overall direction of trend. So, if you guys have ever traded retail before, you would know, and you probably said this to yourself many times, why does the market tend to run my stop loss? It's like it knows exactly where I have my stop loss, and then it continues, it hits my stop loss to the pip, and then it continues in my direction. Well, that's the whole point of smart money. That's the whole point of institutional trading. We run liquidity, and then we continue in the right direction. And we can see that after the pullback is done, and after we've made that higher high, right, we can see, accumulation, right? Clear, sell to buy, reprice, continue. That's that level of demand. Then if we get an overall retracement into, I will be looking to buy. was that higher time frame demand. However, we do have lower time frame opportunities, and it happened to be on the 3-minute. So I know it's blurry. I just want to show you the structure. You could see a high, we have a low. We have a high, we have a low. Swept liquidity here. Formed a high, formed a low. Formed another high, so we want another low for another high. It's just lower time frame trading, guys. Same thing. It's all fractal. So if I scale into this, actually, let me go to the 10-minute to show you higher time frame structure here in this sense. So we swept liquidity, and we made a move back to the upside, and we repriced. We consolidated, and then we started to break and make that higher high. So in all reality, this is our demand. And we've come into that demand very nicely, and we've come into that imbalance. We can see with that wick right there. We filled that imbalance. Whoops. Filled that imbalance basically to the T. So I noticed when we came into that level, price started to look, like that U shape, like very discrete lower lows, lower highs. So I'm like, okay, is price distributing on a low or accumulating on a lower time frame? So I zoomed in, and it happened to be on the 3-minute time frame that we accumulated and then broke and went long. And I was hoping that we would get this last sell to buy, and we just missed it by a few pips. But I still think it's valid because this is a swing high, this is a swing low, this is a swing high. So what do we naturally expect? A swing low, right? So an overall retracement before continuing, and that would probably bring us into that level. I think that's still valid. We also have 1 touch, 2 touch, 3 touches of that trend line. I would love for price to come into this now, because not only do we have this sell side liquidity, we also have a lot of buy side liquidity here. These equal highs, these equal highs, and it would just be good targets to where if we come into this level, we can have strong conviction that we're looking to attack buy side liquidity next, okay, and continue with the overall trend. So that's lower time frame trend. However, if we do have that overall pullback, I don't really see anything else to play off of. I would just wait for price to get back down into here. And if not, who knows? Let's just say price goes like this. Price goes like this, and, we create liquidity here, and then we sweep it, maybe fill some sort of imbalance. I have no idea. I'm just making this up. And then we break structure back to the upside. Well, then that would be a point to where a counter trend has been broken, equal lows have been run, imbalance has been filled, pull back into demand, continue higher. Just building confluence around what's actually being shown for that day or for that week. So that's why, these live sessions are good for overall directional bias. They're good for, showing the areas of interest now. But as you guys can see, this is all I could give you at the current time on Wednesday's live session. Throughout the week, we obviously have more areas of interest because, like I just said, stuff starts to play out, right? We form liquidity during the week. We form these, sell to buys, buy to sells, these areas of demand and supply. So that's why we're able to update the VIP spreadsheet and give you all of these trades. But I can't do that for the live streams because it's for like 1 hour per week, or well, I guess 2 hours, 3 hours per week, because we have 2 live sessions a week. But anyways, that's what I'll be looking for, that lower time frame 3-minute demand, and then our higher time frame level if we do have that overall pullback. Because what is forming here? It's all just, sell side liquidity. We're trading off these, I wouldn't say trend line. We're not trading off the trend line, but we're building sell side liquidity to where when we have an overall retracement, this is just a higher high, a higher low, and we can take liquidity, free it up so that we can get into these higher time frame levels and buy for long term. Right. So that's Euro CAD. And now I'm going to stop sharing my screen, and I'll take some questions if you guys have any before I continue with the rest of the pairs. All right. ICT never trades live. Have you noticed? I don't really pay attention to him, really. Cherry picking on multiple laptops, picking the one that trade that wins shows you the winner. We challenged him multiple times, and ICT is shook. I don't really know the guy, so I can't make a judgment. I don't really like to judge people. It's just not a good habit to get into. Because if you judge, you will be judged. If you guys are Christians, you probably would know that. But I don't really know too much about the guy. I know he's very popular in the industry. I'd be more than happy to challenge him to a trading challenge. I've been open to doing that with anybody. If people are scared of doing that, then they're probably not real traders at the end of the day. tell them to challenge me in a trading challenge. I would love to do that. I've been wanting to do that for a while. If you guys want to see a trading challenge between me and somebody, reach out to whoever, would be interested in doing that. If you guys have another trader who's really good, and if he's interested in doing that, I'd be more than happy to. I just think it would be fun. It would be something to entertain you guys at the same time. Obviously still provide you value, but you guys could then see who's actually real and who's not. I've been wanting to do that for a while. Can you challenge Dave Teaches FX? Sure, I'd be more than happy to. And it's all going to be fun and games, guys. It's not going to be, something serious to where, we're going to trash talk each other. I'm not going to be the one to do that. It's all going to be fun and games at the end of the day. Whoever wins, great. We'll shake hands and we'll go about it. Mutual respect. But this is why I want to do this, because I'm sure you guys probably have other mentors you guys are involved in, other groups, other communities that you probably are in as well. Whoever are the leaders of those groups, tell them to do audit videos, tell them to have track records, tell them to do these trading challenges. If they say no, or if they don't respond to you, they're probably hiding something. They're probably not giving you full transparency, and they're probably not real traders to begin with at all. And I'm just being straight up because I've dealt with a lot of that. My mentor has dealt with a lot of that as well. He has seen the ins and outs of who's actually real, who's not. So a lot of practice needed in order to be perfect. Yeah, I mean, you're never going to be perfect, but yeah, definitely practice experiences 100%. SRC or smart money concepts. I don't know really what SRC is. What is SRC? Smart something concepts? I don't know. I guess you can call it SMC, institutional trading, whatever you want to call it. It's just, playing off of institutional manipulation, time and price, supply and demand. I try to make it very simple, guys. So you may think that this is like a smart retail concept. Maybe that's what SRC stands for, because it looks so simple and it looks so easy. But at the end of the day, there are so much underlying components to the explanations that I'm giving you for everything. I could tell you, higher high, higher low, higher high, pullback, higher time frame, mitigated demand level. Great. What does that actually mean in terms of the interaction between buyers and sellers? What does that actually mean? And I can go into that just like I go into, like I went over before about, for every buyer, there's a seller, and, institutions have to build liquidity to free up liquidity in order to place all their contracts at that particular price. When you place your stop loss, that means you're buying or selling back your position to the market. Like, that's just a general, deeper explanation into the actual components that we're teaching. What I teach is just, okay, liquidity, sell to buy to sell, mitigation. That's really what you need to know. But further explaining it, like I just did earlier at the beginning of this live session, that I can do if you want me to, about every single component, but I just think it would confuse a lot of you, and it's not really necessary. That's why we try to keep it as simple as possible here. I'm not going to get into the more professional terminology and the deeper story as to what exactly is going on, because at the end of the day, it's the same as me explaining it in a more easier way, and easy is better than hard, right? We can all agree. So why not you challenge Raja Banks? Okay, that's fine. I'm not going to reach out to these people. If you want to reach out to them and say, hey, challenge Ariel Fx, and they reach out to me, I'd be more than happy to accept. Let's see. Yeah, I love the simplicity of analysis. Thanks, guys. I appreciate it. We try to be as simplistic as possible. Our courses are very, I would say streamlined. I wouldn't say step-by-step, because nothing is going to be step-by-step. No setup is going to be the exact same. However, it is step-by-step in the sense, like, we look at this concept first. We look at higher time frame trend, lower time frame trend, objective, time and price, institutional liquidity runs, imbalances, all that stuff we put together so you can guide your trading in a more step-by-step streamlined fashion, but it's never going to look the same. So I can't really say step-by-step in that sense. But you guys, I think you know what I'm trying to say. Which are the profitable pairs across the year? All of them. The market's the market. What's profitable or what's not is the trader. I mean, if you're profitable trading Euro USD but not GBP JPY, doesn't mean GBP JPY is not a profitable pair. I mean, it's a market. It's the pound versus the yen. It's just the exchange rate. It's just the way that you trade it maybe doesn't really work for you. Maybe, I don't know. I like the majors personally. I like trading the dollar. I like trading, the Swiss franc, like CAD chef, A chef, N chef. I like those crosses. I don't like trading GJ. I don't like trading GN. I don't like trading all that. Over the past 5 years, I haven't seen much success on it. And it doesn't, it respects smart money, of course. I mean, any asset class will have some sort of institutional manipulation and supply and demand, of course. But what looks the prettiest is what I try to teach and what I try to trade. Do stuff that's easy and not stuff that needs to be difficult. The more complex something is, doesn't mean it's better at the end of the day. How would you explain keeping track of higher time frame structure and lower on your chart? Always know where you are in structure. GN trash, bro. Yeah, they are. I don't like GN. For structure purposes, just okay. Andy, I'll go over that right when I share my screen again. Let me just go over the rest of the questions really quick. All right, let's see. An AUD/USD loss zone you highlighted. Can you explain if it's at a discount for the buy? Like I said, the lower time frame area of demand that I went over, I need a higher high to be formed first. If the higher high is formed first, then I would like to see a pullback into that demand. Overall, on the higher time frame, if you zoom out, if price pulls back into that higher time frame level, then yeah, obviously that would be at discount. That's what I'm looking for anyways, but we're trading with the lower time frame structure. So as long as we get that higher high in that lower time frame that I mentioned, and we pull back into that demand that I highlighted, that would still be valid. Hopefully that answers your question. All right, let's continue here. I'm going to share my screen again. So structure really quick. I know structure is really big, guys, right? So structure is huge. It's so important to understand. And for all of my VIP members who are a part of our all-inclusive mentorship program, I'm going to be creating, like I said, that Smart Money is Supply and Demand course for you guys completely for free. I'm not going to upsell you on that. I don't believe in upsells. Upsells are crap. I mean, I make my money trading anyway, so I don't really care. So that's going to be given to you completely for free. It's going to be so many hours of content because it's going to be a lot to talk about, but it's going to be so valuable. And I can't wait to get that released, hopefully in the next couple of weeks. But again, I'm not going to rush it. So with structure, with something like AUD/USD, right? Where is the structure on the higher time frame? If I go to the higher time frame here, where could I see that structure would lie, right? Well, it's kind of tough because this is a lower low, this is a lower high. This is a lower low, this is a lower high. This is not a lower low, and it actually has reacted off that demand zone here. So it's tough. We're trading within this range here. So obviously, yes, we are still overall bearish, right? Because we can just see the structure here. If we zoom into a lower time frame, we can see that this is, one here, pullback, two. I wouldn't, it's so tough to explain this because, just from AUD/USD, this is not pretty. I would probably classify this as one push, one pullback. Why? Because we swept liquidity, we came into a prior supply, and then we made a lower low. This is all intermediate, right? This is all intermediate swing. This doesn't mean it's a break of structure. It just means that, we could be seeing an overall pullback for continuation. So I would classify this definitely as one expansion, one pullback, one expansion. So this is the range for this expansion. And we're seeing we're in a pullback formation right now, right? So on a lower time frame, this could be your low, your high, your low, your high, your low. So we pull back. Could we react off of something in here? Sure. That's why I'm looking for reactions from that level. I'm not going to be placing sell limits, but I'll be looking for reactions. That would be my first level of interest. My second level of interest would probably be either, this level of supply, but really this level of supply here. Why? Because if we're seeing that this is one expansion and one pullback, remember, where is the last buying volume within the retracement period, right? If this is an expansion, where's the retracement? Right here. High, low, high, low, high, low, failed to make a higher high, lower low. So that would be that last point of supply. So that's where I would look for, potentially look for sells, or, look for distribution or slowdown in price to potentially sell off. However, the lower time frame structure is extremely bullish. Right? We're looking at trading within here. However, we can see that since we came into a higher time frame level, that this area of demand, because we can see a lot of imbalance. Oops, let me go to the daily. You can see the daily time frame, a lot of imbalance. So I would see this as more of an overall pullback before continuing. But if you want to scale into a lower time frame and trade it like this, high, low, high, low, high, low, high, low, high. This would be a pullback low, and you look to continue to trade with this trend until our higher time frame objective levels. If we get an overall pullback, doesn't mean we're bearish, just means where could we pull back higher time frame to continue like this. And then we have our higher time frame. It's so difficult because the AUD/USD is not really I wouldn't say not a good pair to show structure. I mean, every single pair is good to show structure. It's just, it's not, we're in like a higher time frame range in a sense. We're not making higher highs, but we're not making lower lows, right? Lower low, lower high, but we're not making a lower low. We're making a higher low. So it's just a little tricky. I would just don't even worry about all this stuff in here, guys. This is all daily time frame. Sure, you can mark off your daily levels, but at the end of the day, trade with what the direction of trend is currently. Trade with the current direction of trend until it breaks. Because if you're so focused on trading when price comes up into these levels up here, you're going to be waiting for days, weeks, or months, right? So just trade with the current direction. I'm sure you can find opportunities. And it doesn't mean that you have to be, finding the exact levels. What you can do is simply wait. What if price goes like this? Goes like that. Well, it didn't come into a level, but it sure as hell swept liquidity and broke counter trend structure. You can wait for pullbacks to go long, right? Just waiting for institutional liquidity formations within the structure at hand to form. And then you can just play with that. I'm going to make the course very, very easy to understand. This wasn't a good example. A better example would probably be on USD CAD, which I'll quickly show really fast. Where's USD CAD? And we can see here clearly that higher time frame we're bearish, right? Lower low, lower high, could be in for a lower low. However, lower time frame we're bullish, high, low, high, low, high, low, high, low, high, low, high, low, high, low. But lower time frame, we could be bearish. Lower low, lower high, lower low, lower high. Lower time frame, we could be bullish. High, low, high, low. It just depends on where you're trading, right? And if you can just mark off just general areas of interest for each sort of time frame structure, I think you'll be a lot better. You'll do a lot better. Because structure is definitely very important to understand. Not only where the current structure is, but where is it most likely to head before potentially reversing. So hopefully that answers your question. If not, just ask me later. I can probably show you a better example after this call. All right, so where were we? We were Euro GBP, JPY, Euro USD, Euro CAD, GBP Swiss franc. So GBP Swiss franc is really, really nice. So again, it's tough because we're not making higher highs, but we're not making lower lows. We're kind of stuck within this range here. So anyways, we are still overall bullish though. If we go to the daily time frame, pound is bullish at the moment. We are still making, higher highs, higher lows, kind of, right? We're overall bullish at this current time. If we are to go short, we probably have to do that up in here. Our higher time frame supply, expansion, pull back into this supply here, potentially for low. I'm not saying we're going to go short here, but 1.2 would be a very attractive level for GBP Swiss franc. All right, so let's just scale into a lower time frame and look at the current structure of the market. So we've created a high. We've created a low. We've created another high. We've created another low. We swept liquidity. We formed this head and shoulders. We faked out from the head and shoulders and went long, screwed over retail traders as the market always does. Within this pullback, we had a clear sell to buy repricing continuation, that area of demand, which is exactly why we stopped right there. So when we stopped right there, we look at the counter trend and see where it could break. Low, high, low, high, low, high, low. I guess you can say higher high, higher low, higher high, but really I would say this is the low, this is the high, this is the low, this is the high. Failed to make a lower low, higher high. And that's where we started the uptrend. So a pullback into these levels would be definitely valid. And we can see that we came into our last point of demand right there. That last point of demand in which price stopped and made that higher high. And we've actually accumulated very nicely in that region. I'm actually going to get rid of this. We've accumulated very nicely into this region, and then we have started to expand back to the upside. So we can see within the pullback, low, high, low, high, low, high, low, high, low, high, failed to make a lower low, a higher high was formed. Okay, so now we're looking for continuations higher. And this is just where it gets tricky, guys, because what happened was we actually came up into a level of supply here. This is just an overall level of supply, sort of a redistribution before continuing short within this lower time frame supply there. We actually tapped into that very nicely. And if I go to the 1 hour time frame, what we'll notice is that we broke lower time frame structure right in here. You can see that high, the low, the high, the low, the high, the low. We failed to make a higher high, and that's where we rolled over and started the downtrend. So that is our last point of supply on the 1 hour time frame. So if we zoom back out, we can see that's exactly where we came up into perfectly. So within this pullback, we maintained bullish structure, higher high, higher low, but we didn't make a higher high. But at the same time, we never made a lower low. We respected this demand. We respected supply and demand. And this is just where it gets a little tricky. So we've swept all this liquidity, buy side liquidity, 1, 2, 3, 4, 5 touches. We ran it and then we went short. So this is our supply up in here. If we just look at the structure, high, low, high, low, high, low, failed to make a higher high, lower low. And that's where we started the trend down. So that is our nearest level of supply. So what we could do is hedge. We're bullish on this time frame. We're looking for buys. However, we're kind of bearish in this sense. We've come up into supply nicely. We broke structure. We came up into supply again here. We failed to make a higher high. We broke structure counter trend. We're making lower lows, lower highs. We could pull back up into there and short off again. However, we're still making higher highs and higher lows here, and we're respecting demand. Demand. So it's just a little tricky. So in this case, we could potentially hedge. We could be buying and selling. So I'm looking for buys from this level. Remember we had that accumulation, low, high, low, high, low, high. We failed to make lower lows and made higher highs, right? Counter trend in here is broken, low, high, low, high. We cleared equal lows, sell to buy, broke counter trend structure, and we came into 1.1180, which was that original level that we had to the T, and then we went long. So within this pullback process, when we expanded again, what did we form? Repricing event, demand. So those are the two levels I will be looking to take positions from this week. I'll be looking for these two levels of demand just to continue to trade with this current direction, noting that we have relatively equal highs in here. This previous swing high, haven't quite come up into it, but this is buy side liquidity. And we have that overall level of supply in here. If we are to go short, I think we need to come up into that level first before going short, if we are to go short. If we're going to go long, we're already looking for buys anyways. So that's where that overall objective comes in. So I will definitely be looking for buys from those two levels, but then also looking for shorts here. So what I could do is hedge my position. I could be setting a sell limit right there, which I'll probably do, and then setting my buy limits there. However, I'm also kind of looking for this region of pricing here because remember when we broke the counter trend structure, we had 1.118 psychological level that we got into. However, when we pulled back, we never actually tapped into the selling volume. We never really did. The selling volume that failed to generate a lower low, low, high, lower low, lower high, failed to make a lower low, higher high. We actually never tapped into it. We can see this wick didn't come into that selling volume. So what could happen, price could even come lower, sweep this liquidity, come into this level, and then go long up into that level. So what you could do in that situation is maybe do 1/3% risk here. If it goes long, great, you're making money. 1/3% risk here, because you would set your stop at the open of this new entry. So you would, if price comes into this level, you would lose on this one, 0.33%. If this one goes long, then great, you make more money than you did the loss on the buys. If we come even lower than that, 0.33% at this level, stops below this low here. Because at that point, if we just roll over, then we're going to go bearish and we've broken structure. And we don't want to see that because we've accumulated into a level of demand. So the probability of us going long is a lot higher than us going short. So 3 levels, 1, 2, and below these equal lows here, 3, 0.33%, 0.33%, and 0.33%. Just because if you lost all 3 of them, you would only lose 1%. So splitting up your risk, buys up into this region, and then we can look for shorts. Hopefully that makes sense. All right, guys, I don't have a ton of time left. I'm going to quickly skim through the rest of these pairs here. GBP USD is the exact same, right? We are higher time frame bullish. We have swept these equal lows, clear sell to buy. We have broken the counter trend structure. We're looking for buys up into 1.25, higher time frame. Okay. So if we scale into a lower time frame, sure, if we find like equal lows right in here, if we go like that, sell to buy, equal lows, maybe we come into something in here, I have no idea, and then we break again, then that would be great for a pullback to long, just to continue with this lower time frame trend. If we get something like this, I'm not saying it's going to happen, but that's what we would look for if we're looking to buy again. If not, then if price just comes up, well, then we deem this invalid and we just move on. But if price pulls back, then that would sweep all that liquidity and we can then buy it from 1.2 and 1.1936, that demand level there. So those are my levels right now. NZD USD, very similar. Just missed our 0.63 level. I want price to come up into at least 64320. That's the most recent supply. However, we're overall bullish. So I fully expect a higher high. Why do I have that supply there then? I don't have it because I'm looking for sells whatsoever. I'm trying to build probability within my trades. So let's just say that if price comes back down into here, what's the probability that I go long up into 64320 at least? Excuse me. What's the probability that my trade works out for me? It's very high because for one, we've come down into demand. 2, we're overall bullish to begin with. 3, we have broken the counter trend structure to the upside. 4, we have imbalance to fill. 5, we have demand down in here at discount. 6, we have this level of resistance, support, resistance, support, resistance, turns back to support potentially. So this is a clear, very sensitive level in the market. That's 6, right? What's 7? Overall objective. Again, we have to ask ourselves the question, what if price goes short? Where would it go short from? And it's going to go short from levels of supply, levels of manipulation. And the most recent supply level is obviously right in here. This is where we failed to generate a higher high, made the lower low. This doesn't mean that we're going to go short from this level because look, where's the trend? We're overall bullish. We want to continue to be looking for buys here, obviously. But if price is going to go short, which I do not expect, but obviously we have to take risk into account, then 64320 would be that level in which, we would like to, not like to take it short. Look to take partials, look to move stop to break even maybe. But also if we haven't come up into that level and we pull back into our buying level, that just gives us more of a probability because if price is going to go short, it needs to go short probably from there. And by the time it comes down into here, if it hasn't reached that objective level yet, well, that gives us an excuse for price to go higher into that level. At that point, we would be making money, right? So just building probability within your trades. 6.3 is my first level. 6.2, 6.5 is my second. All right, so those are the levels on which I want to take trades from. USD CAD, talked about this earlier, kind of. We're still currently bearish on this time frame, right? Overall, yes, we are bearish or bullish this time frame for sure. However, we're overall bearish on this time frame. Boom, 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 like that. So it's just a little tricky. So what do? Well, we just keep trading with the current trend until it breaks. We know we have equal lows down in here. We know that we haven't come down into 1.321 because this is the last selling volume before this expansion. So that's our higher high, right? And I think if price is going to go long again, it probably should come back down into 1.321. I'm not going to say it's going to go long from there, but if it is going to go long from there, it should go long from this region, this last selling volume. Why? Well, because we never mitigated it, for one. Two, we have equal lows right there. Three, we have equal lows right here. So I think definitely, we are to see lower prices on USD CAD. Dollar is extremely bearish as well. So what do we have? Well, lower low, lower high, lower low, lower high. Where did the trend stop? Right? Because we were creating highs, lows, high, low, high, low, high, low. Kind of failed to make a higher high, sort of a lower low, and then we really failed to make a higher high, and then we really broke structure. So this is where we started to top out. This is just an overall lower low, lower high for a lower low. That's what we're looking for. So if we scale into this, what do we find? Well, we can see that when price kind of failed to make a higher high, we came up into supply. We had the reaction. And this was what, Friday in the March. This was NFP last week. This was that repricing event before going lower. So that's where we really broke the structure. So if we can get back up into this region of price, I will be looking for shorts. However, having a stop loss for like that would not be realistic, right? In terms of our risk to reward, right? Obviously, I don't care how big my stop loss is. If my risk to reward is there, then I'm taking the trade. But from a risk to reward standpoint, I don't even think my rules would be met. So what I could do is split up my positions. I could have one at this huge imbalance and a more premium price, 1.36 psychological level. So what I could do is I could enter one right here, put my stop loss at the second entry. So I wouldn't have to worry about putting my stop above this high to where price could come up, run my stop, but not hit me in for my second entry. Put the stop loss at the second entry and put the second entry stop loss at the overall high, just because, it could easily come into there and go short. And we may not even come up into 1.36, but at least we're in the trade. And at least we can minimize risk by putting stop here instead of putting stop up there. Secondly, if price does have a deeper pullback, we could come up into 1.36 and have a better risk to reward with that. Obviously, 0.5% risk there, 0.5% risk there. You'd have to split it up because they have two positions. So that's what I'll be looking for. USD Swiss franc, same sort of deal. Higher time frame. We were, I guess you could say, originally looking for, well, I'm not going to confuse you. We're overall bearish, right? We're making lower lows, lower highs. Dollar is weak. We want to continue to look for sells. What do we see here? This is just an overall pullback. Boom, 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 lower low. So what do we expect? Lower high for a lower low. So what do we pull back into? We can see we cleared liquidity, repricing event from Friday's NFP. Lower low, lower high. We pulled back and mitigated that level. When we did take the short, we are in profit at the moment. I would personally, when price taps down into this region, I would probably move stop to break even and take partials. Why? Because again, ask yourself the question, if price is going to go, if going against my trade, where would it do that? Where would it go long from? If we're shorting here, I mean, obviously the probability of it going short is a lot higher than it going long, but what if it goes long? Where would it go long from? Well, where's the counter trend? High, low, high, low, high, low. That's our previous demand. So if we come into that level and it goes long, well, that would make sense because it came into that level. Obviously, we're not looking for that. We're looking for continuation short because the trend is short. But if it's going to go long, it probably should, or it would from this level. So by the time it gets back down into here, when market opens, I'll need to move stop to break even, or at least just back above this previous swing high. Okay. You don't have to put it at break even. Just put it at the previous swing high, move it from here to down in here. Would mitigate some risk and also take some partial profits. Okay. That's how we can sort of manage that trade. No other re-entries at this time. NZD Swiss franc. I don't want to talk about this at the moment. It's just going to confuse you guys. Overall, we're bullish. Let's just keep it at that. It would take too much time to go over everything with NZD Swiss franc. USD JPY. I have a few areas of interest here for you. Well, just like all the US dollar-based pairs, we're extremely bearish. We're making lower lows, lower highs, lower low, pullback, lower high. Overall pullback here creates liquidity, fakes out. So this is where institutional manipulation is at its finest here. This is what I just love to see. I love to see price fail to come up into a level, break the structure, entice short traders below the previous swing point because we've broken structure, then have price run all the way back up, sweep the stop losses of any people who are selling in here because of the structure break, sweep liquidity, actually come up into the level, react from it, and then go short. That is how retail traders lose. So what do we see? High, low, failed to make a higher high. Why did we fail to make a higher high here? This is demand. We reacted from demand. We failed to make a higher high. We made a lower low. Why? Because we swept liquidity. We're overall bearish. We mitigated this previous supply. So there's really nothing left for price to do but to go short. So that's why we failed to do that. And I was hoping that we would get back up into that region of supply to short off. We never did. But I still like it. If price can have an overall pullback, just like on EJ, back up into that level, I will be looking for shorts. But that's a deep pullback. Maybe we can look at what's more likely to happen at this current trend. Lower low, lower high, lower low. So where can we pull back into? If this is the range, if this is the high that created this low, we could pull back into 131.3 or 133.3. And I'll discuss that now. 1 hour time frame. Again, sort of like USD Chef. That is our repricing event. Sweeping liquidity. We swept it and then we broke the counter trend structure. High, low, high, low, high, low, high, low. Failed to make a higher high, lower low. I was hoping to get back up into it there, but we never reached it. But if we get an overall pullback, that would be valid because this would just be intermediate liquidity because this is the high that generated this low. This is the overall expansion. This could be a pullback for expansion. But again, how likely are we to actually pull back that deep? Don't really know. So, you could probably treat this as high, low, demand, high, low, failed to make a higher high, lower low. This could be your new demand to supply flip. You could pull back into that for shorts. And we have our 4 hour 50 EMA right there for confluence. So either of those three levels, here, here, or here. What I would do for this one is probably split up my risk. Again, entry could be there. Stop could be right there. Secondary entry could be here. Stop could be right there. And obviously you have your third. Boom and boom. All right. That's my bias on USD JPY. We're in just a crazy downtrend. Volatility is strong to the downside. So nothing at the moment. We're just going to be waiting for a pullback. If we get it, great. If not, oh well. AUD CAD. AUD CAD is beautiful. Why? Well, you probably can see. Look at that. Look how beautiful that is right there. We are overall in an uptrend. Obviously, you can probably see that from the higher time frame. We're continuing to make higher highs and higher lows. Daily time frame swings. This is our most recent area of demand supply. Overall pullback, overall lower low. Overall pullback, we'll see what happens at that level. Lower time frame, high, low, failed to make a higher high. This is where we started to roll over. Okay, so that is our last buying volume. It's not a sponsored move, but it's a supply level because this demand that we came into, reacted from, failed to produce a higher high. Instead, we made a lower low. So that's that supply to demand flip, or demand to supply flips, excuse me. So if we are to continue with this downtrend here, low, high, low, then that's where we need to come into first. So we can continue to buy up until this level, probably maybe 9.4 psychological level. However, we take a look at the weekly time frame. Why did price stop there? Well, let's just look at this. This is just crazy to me. Back from 2001, we started this 5 touches of this higher time frame trend line. April of 2001, and it ended on September of 2008. For 7 years, we started this bullish uptrend, creating so much liquidity. 2008 housing market crash. Oh, you think that was an excuse? Of course, that was an excuse to sell off, to take all the liquidity here. Everything is pre-planned, guys. This whole entire world is pre-planned. If you think anything happens just out of coincidence, I would highly recommend you think twice. The elites of this world run the world, okay? We do not do anything. We are little minions to them. Everything is pre-planned. Everything happens for a reason. And we can even just see that within the markets, okay? We run liquidity. We make a move to the upside. We reprice. We continue higher. That's what starts the uptrend here. Higher high, higher low, liquidity run, higher high. Now we're looking for a higher low. We sweep equal lows, come into that repricing event. Boom. We sweep all of this crap here, or all that crap, right? So we sweep it. And again, do the same thing. 2020. Why do we come into that level? Use as the excuse, COVID, sell to buy, reprice, continue higher. Okay. So lower time frame, I think on the daily time frame, there's a demand in there. So that's why we come into here and we rally to the upside. So yes, technically we are bearish here, but I wouldn't be surprised whatsoever if we just blast it off. And that's probably what I'm going to be expecting. So even if we do come up into this objective level before pulling back to go long again, I will still continue to look to buy it, even if we come into this first, because of the fact that we came into our overall demand way over to the left and we're overall bullish. Yes, technically we're counter trend bearish, sure, but I firmly expect further upside. So with that being said, if we have an overall pullback, then these levels down in here would be valid for me for longs. Higher high, higher low, higher high. That's what we would be looking for. So that would be within this imbalance. This is where we stopped. We can see that we've made a low, a high, low, high, low, high, low, high supply. Failed to make a lower low, higher high. So this last sort of overall selling volume in here would be valid for me to take longs from if we get back down into it. Because we can see we have so much sell side liquidity. Boom, 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 right in there, equal lows. And here as well. So when we broke the structure, we failed to make a lower low. I guess you can say that's the last selling volume. We expanded very strongly. We have that lower time frame demand, and then we have the imbalance in here as well. So that's what the higher time frame levels would look like. Lower time frame, obviously, we are still continuing to make higher highs and higher lows. High, low, high, low, high, low, high, low. Could make a high, could make a low, could make a high. What would that do? Oops. Sorry, guys. Demand. We came into demand. Lower time frame, we form this trend line. On the lower time frame, this is beautiful. We just continue to entice buyers into the market. Boom, 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 boom. Nope. Sweep their stops, continue long. Come deeper into this demand there. So that's a clear sponsor candle. Happens at 9 a.m. Eastern time. That's New York session open. So yes, we don't have to come into it immediately. We didn't. But this would form that higher time frame liquidity. Sell side liquidity, right? To then go and run after we make another higher high, higher low, higher high. I still like this level a lot. But again, even though all of our confluences are there, we still have to use good risk management. Lastly, AUD, NZD. See, the Aussie is very strong. Across the board, same sort of deal. This is really cool, guys. Really, really cool. These are not equal lows. This low was taken out by this low. This low back in 2020 was taken out by this low in 2015. At the same time, producing this trend line here. 1, 2, 3, 4 touches. We run it, 2020 crash, sell to buy, reprice, continue. Why? Lower low, lower high, lower low, lower high. Right there. Many people were treating this as, oh, this is just the trend line. Oh, we broke and retested the trend line. Let me short it off. Let me be a little retail trader. Okay, go ahead. You're going to lose even more money. Great. So that reprices the market, continues higher. So that would be our previous swing point. We broke in the previous swing point high, swept liquidity, broke back to the upside. This is the low that produces this high. So this is the entire trading range. We understand that that's the repricing. So that's exactly what we need to come into. So what does the market do? We create more liquidity. Right here, right here, right here, just so we can come down, run it all, and then continue higher. So we mitigate that repricing event or demand down in there, and we can see that we have the reaction from it. We pull back, we fail to make a lower low. And then we break this counter trend structure, low, high, low, high, low, higher high, again, failed to make a lower low, higher high again. So that's 1.05. This level of demand in here is beautiful. Again, higher high was formed, overall pullback, higher low. People are thinking, oh, this is death. This is death. This is death. Nope. We come into objective. Now we immediately reverse. Now they're thinking, oh, this is very strong to the upside, which we are. We're going to be making a higher high most likely. So one of two options. We come back down, sweep all this liquidity, which could happen at a higher time frame, sweep all this, come into imbalance and our last point of demand. And this is just another beautiful thing, guys. I love to see this. This you can find on more intraday setups as well. When we create ranges, we sweep the high first, entice the buyers, come back down, sweep the lows, entice the sellers, take the stop losses of the buyers because they're back down in here. At the same time, 1.05, we mitigate that level. Remember, we talked about it to the left just a minute ago. We push back up to the upside, reprice, continue, and now we start the uptrend. So we're shaking people out of the market. We mitigate higher time frame levels. So now if we get an overall pullback, so this is just one expansion. If we get a pullback, boom, I would like to see, probably 1.06 or 1.0575, something like that. So I'm actually going to mark that up because I don't want to forget that. 1.06. Perfect. So lower time frame levels, we can still continue to trade off this current time frame, right? These swing points, we can definitely just look to continue to buy until it breaks. Once it breaks, then we have higher time frame levels in which we can take trades from. So let's zoom into a lower time frame. Well, I was really hoping that price would, because we can see that. Actually, let me do this. Let me do that. That's more clear. We're forming a wedge. 1, 2, 3, 4, 5 touches sell side. 1, 2, 3, 4, 5, 6, 7, 8, 9 touches buy side, right? We entice buyers above the breakout here. You can see that candle. And then we come lower, take their stops. Enticing sellers below this level. I was really hoping we would push back down into demand. Oh, I had a sell limit there. I just missed by a few pips. Oh, well, I still think it's valid, and I'll explain why in a minute. But we take just like we saw down here, guys. Taking buy side, taking sell side, taking buy side, kind of forming retail resistance, retail support. Again, retail wedge. So we buy up, entice buyers, come back down, entice sellers, then we continue with the current direction of trend as always. So again, look at the counter trend here. Low, when we sold off, we pulled back into supply here. We repriced, we failed to generate a lower low. And instead we made a higher high. So that's what I'll be looking for. I'll be looking for price to pull back into here to go long. Or if we get back down into this level of demand, I still think it's valid. I think we can maybe use this as sell side liquidity. I don't know if that's going to happen just because of the fact that we manipulated long, manipulated short, and then went long. So I don't think the institutions need to come below here. I don't think there'd be any reason for that. There wouldn't be any liquidity most likely for that to occur. So this is the most valid one. But if we do come back down into here, I will still be looking for longs, really just areas of demand to look for, excuses to buy. So I know, guys, that was a lot. You have the recording on the Trading That YouTube channel. Right when we're done with this, it'll be uploaded. So feel free to go back and watch it again. That's all I have for you guys today. I will be taking some questions now. If you guys have anything for me. Let's see. Yeah, guys. I mean, if any of you are like wanting to really take this to the next level, if you guys are just not finding consistency in your trading, you can be up to the same understanding as me. It just takes time and practice, but it takes the right education first and foremost, but then it takes the right mentorship. You can't have one without the other. We've tried it, for 5 years, we used to sell our courses individually. We used to sell our VIP individually from one another. But that doesn't help because you take a course without mentorship, you're going to naturally fail with it. You're not going to be a master right up front. So you fail with it first and then you quit. That's the normal cycle of a trader. Same thing with mentorship. You get mentorship, but you really don't have the education paired with it. So you really don't understand what's being taught to you. That's why we only have an all-inclusive package. So, I mean, if that's something you guys are interested in and hopping on board with, I mentor people personally as well. So I can sit down with you personally and create a plan for you. So, if you are, interested in wanting to learn more and take your trading to the next level, like I'd be more than happy to speak with you. But we do require you to book a call on our website. Just go to arielfxtrading.com. I'll drop it right in here. Book a free call, maybe like 15, 20 minutes. We just want to talk to you about your trading and see how we can best help you. It also is helpful because maybe the way that we teach you may not resonate with. So we like to kind of see, well, where you're at and how we can best help you. And if we can, great. We would love to extend the invitation for you to join. And if not, then obviously you guys would know that this isn't really for me. And then you won't, spend your money on something that won't actually help you, or that you don't think that would help you. So that's why we just want to be fully transparent. I'll type in my website here. You guys can have it if you want to check it out. We just don't want you guys to spend money on something that, won't actually help you. We want to be able to help people who really want to learn this strategy. So that's why we require those calls. Let's see. Any questions? What's the difference between break of market structure and when liquidity is taken out? So when breaks of market structure occur, let's just say you break to the downside. Are you overall bearish or are you overall bullish? If you're overall bearish and you break structure to the downside, you can easily see that as a pullback for continuation short, right? Because you're overall bearish. But if the higher time frame is bullish and you break structure to the downside, you may be short-term bearish, but that doesn't mean you're overall bearish. So that could just be an overall liquidity run or just a deeper pullback for a higher time frame continuation to the upside, right? So for instance, if I go into here, if we are overall bearish, right? And we're looking for pullbacks and we're going like this, boom, 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 boom. And then we break structure here. We're overall bearish. So we can be looking for pullbacks to continue to short. But if we're overall bullish, if we're making higher highs and higher lows and we go like this and we break, that doesn't mean, we could be short-term bearish for sure, but that doesn't mean we're overall bearish. This could just be maybe a liquidity run for a continuation. It could just be an expansion, pullback, expansion because we're overall bullish. So I would treat this as an excuse to, if there's let's just say there's a clear level of demand down here, then yeah, maybe you could pull back and short off into that and then buy it back up, right? Potentially. But just because we break structure doesn't mean that we're just now bearish. You have to look at the higher time frame and say, okay, well, this could just be an overall retracement, right? For an expansion, higher time frame pullback, higher time frame expansion again. So just have to look at the higher time frame structure and see where you're at. Hopefully that helps. Did you go over A-Chef? I did not, and I don't think I'm going to, just because. Let me just see really quick. A-Chef, we're overall bullish in A-Chef. I looked at it this morning, and I couldn't really. I know where it's going, in my opinion. I just don't have any clear areas of interest to show you. And if I try to describe it to you, it's probably just going to confuse you. And I just don't want to do that. Overall, AUD Swiss franc is bullish in my opinion. So that's your directional bias. Hopefully, you can do something with that. Gold, I don't trade gold. Sorry, guys. Best pairs for beginners, probably stick to the majors. US dollar pairs, EU, NU, AU, GU, maybe USD CAD. I don't do US 30. Sorry, guys. US 500. You guys like a lot of those indices. Guys, I do not trade anything but Forex. So no gold, no US 30, no anything but Forex pairs. And if some of you guys are new, that's fine. If you haven't been on these live trading sessions for a while, it's okay. TradingView Pro, real-time data. I don't really have a problem with TradingView. The price differences on my broker are pretty much minuscule. They're pretty much the same. So what I would recommend what you do is you do analysis on TradingView. Well, that's just what I like. You guys can use another, mode of doing analysis or whatever, but I like TradingView Pro. I can back test on TradingView Pro. But at the same time, I just go to my charts and see what the price difference is because, if, for instance, if we're coming into a level of demand that I want to buy from and TradingView is showing a little bit of a price difference than my brokerage prices, then I'll, adjust my entry on my broker to fit the analysis that I did on TradingView, if that makes sense. So Yeah. I mean, if you guys, the reason why I don't trade indices, guys, is just because it doesn't flow the way I like it to. It doesn't wave like Forex pairs do. I like the way Forex waves in terms of its structure, in terms of its, just wave play. Indices can be kind of crazy. It doesn't mean they don't follow smart money. I mean, everything follows smart money to some degree. I mean, there's always some sort of manipulation. There's always going to be liquidity. There's always going to be volume and supply and demand. It's never going to go away. That's how the markets move. That's how what they are. So, if you guys like indices, more power to you, but that's just not my personality. Do you get withdrawals easily with AAAFX? I don't know that brokerage. I'm sorry I couldn't help you there. If you're international, I recommend Alchemy Markets. I recommend IC Markets. I have no affiliation with any of these brokerages, so I do not make money on this stuff, guys. I'm just giving you pure recommendations. If you're in the US, I would recommend Oanda. I'd recommend LQDFX. I use LQDFX. I have a good relationship with them. They're not regulated, but I have a really good relationship with them personally. So I know my capital is very secured there. Let's see what else. There's another one I liked. I forget which one it is. If I think of it before the end of the live session, I'll let you know. What do you think of high frequency scalping? Are you doing top-down analysis? I think that's just what I think of it. You can't high frequency scalp unless you have a holistic understanding of everything that's going on from a top-down perspective. See, I can enter off of the 3 minute, just like I showed you guys on, what was it? Crap, let me go find it. Was it CAD Chef? No. Was it E? What was that 3 minute time frame level I was trading on? Man, I'm looking at so many pairs. Oh, Euro CAD. It's because, the higher time frame is bullish. We're trading within set like 15, 30 minute time frame structure. We've come into an area of imbalance on the 10 minute. We've broken structure, counter trend to the upside after accumulating in like the 5 minute, and then the 3 minute time frame showed that clear sell to buy demand level. So I don't know if that would be high frequency scalping, maybe like scalping. I don't really understand high frequency scalping. But I wouldn't say scalping is bad. It's just whatever time frame you're on, you have to understand the holistic perspective of the entire market, though. So, what's the best strategy for passing funded account with 25K? The best strategy for passing an account is your own experience. Like there's no golden strategy, guys. There's nothing that's going to just help you become a master trader all up front. Okay, you have to put in the time and the work and the effort. You have to put in the experience. Any strategy you can make work for you. You can make anything. You can probably make retail work for you if you understand it enough and you can put together a system that works. Now, I don't like retail because it doesn't teach you and show you how the markets actually move. But I'm sure if you put years and years of experience into developing a system for it, you might be able to be profitable with it. But at the end of the day, there's no such thing as the golden strategy. There's no such thing as, anything that's going to magically just make you profitable. It takes failure and it takes time. It takes practice. It takes experience. It takes the right education and the right mentorship. So I would not recommend taking a prop firm challenge if you guys are not already profitable. You're just wasting money. I'm straight up with you guys. Just don't waste your money. Treat it as like an individual trade, right? If you don't have confluence for a trade, you're probably not going to win the trade. Same thing with a prop firm challenge. If you're not already profitable, you're probably not going to win the prop firm challenge. That's just my 2 cents. The Asian range strategy, yeah, I like that. I like to, understand. Obviously, you have to have a holistic understanding of it. Higher time frame trend, lower time frame trend. If everything is in alignment and you have your Asian range, and just like I showed you on AUD CAD, if you fake out in one direction, entice buyers, let's say, come down, entice sellers, and then go long. If you're overall bullish, I like to see the Asian range low run and then the continuation to the upside. Whether that be this. Now, and this is a good example. Let me show you. Let's just say we're overall bullish. Okay. We're overall bullish like we are on Euro CAD, lower time frame and higher time frame.
Okay, let's go down to the 5-minute time frame. Let's just say that the Asian range, especially, let's say this is not even there, because it gives me more conviction to break out, go like this, because there's conviction behind this area of interest. Let's just say this is not even there. Okay, so just from a pure technical standpoint, obviously making sure you're overall bullish if you're looking to buy. But if, let's just say the Asian range is like this, so it's going like this, and price goes like that, like this, and like that. Oh my gosh, I am buying all day long. Back up the Brinks truck. You're going to get paid. And that I learned from Steve Morrow. Steve Morrow, I do like him. He's a cool guy, MMM guy. I met with him a couple times. He's really interesting. Obviously, he's not my mentor, but I learned a little bit from him back in the day when I first started trading. And he said that phrase, and I love it. It's just cool. But it's true. As long as you know where the institutional volume rests and the liquidity rests and the manipulation that occurs around specific times of day, when he says back up the Brinks, if you guys know what Brinks is, it's like if you've seen Brinks trucks, it's when they carry all that money, back them up, you're going to get paid, meaning your probability of making money off that particular setup is extremely high because there's a lot of confluence around it. So for instance, if you break out of the Asian range high in London session or something, enticing buyers, and you come down and entice sellers, take the stop loss of the buyers below where they place their stops below the low, entice sellers, then break back above to the upside. If you're overall bullish and this occurs, pull back, mitigate. It's not 100% guaranteed because nothing is, but you have a high probable chance of making money on that trade. I love that type of entry. My mentor taught me that because he looks at, because obviously, guys, institutions, they don't trade price charts. If you guys didn't know that, they don't look at trading view. They don't look at that stuff. They're based upon numbers. They're based upon liquidity and volume. So they don't look at price charts at all. I'm not sure if you guys were aware of that. And actually, let me share my screen again really fast. The reason why we look at price charts is because obviously we can't see the order book. We're not institutions. We can't see the orders getting filled in the real market. We don't have that ability, right? So we have to look at price charts, but it's the same thing. If $50 million of stop losses are below this specific range point, maybe between this range here and this range here, and it would cost them X, Y, and Z amounts to go and take it, maybe it costs them $25 million to take it. Well, they're going to run it because liquidity is there. Also, because maybe they have to mitigate some orders in here or in here. Well, they have to free up liquidity in order to do so. So if the bank algorithms are telling them based upon pure statistics and numbers that moving price to specific regions of price would be profitable for them to mitigate orders and make money overall, they're going to do that. They don't even look at price charts. They have no idea what's going on. They don't care if the market is bullish or bearish or ranging. It doesn't matter to them because they're going to be making money either way. So this is how my mentor taught me. He uses, I'm not going to go into it because it's so confusing if you guys are not aware of it. It's just based upon pure numbers. It's based upon, beta and theta and a lot of just bank algorithmic trading. But when price goes like this and goes like that, the bank algorithms and the numbers are there. It's just based upon pure calculations and algorithmic, mathematics, right? But the price charts would obviously go with that because of the fact that, let's just say all the numbers are there for a particular position to be traded. Well, price would go like this on the chart and it would look like this. So us retail traders, you can call us retail because we are retail traders at the end of the day. We would see this as, okay, that's manipulation lower. There must be liquidity. We mitigate a specific level. We go long. We break structure. Buyers are overtaking sellers because obviously we're not bearish anymore. We pull back. We mitigate orders and we continue. So that's how we can see the clues that they leave behind. However, institutions are not looking at price charts. Hopefully I answered you guys' questions. Maybe I just go off on tangent sometimes. All right, guys. If you guys don't have anything else for me, I'm probably going to head out soon. I'll answer the last couple of questions. Oh, let me send that link to my track record. Can't forget that. Copy that over. All right, sweet. Oh, wait, hold on. That's not the right one. Sorry, guys. I'm just trying to get this in for you because I know it's very important that you guys keep up with that. Copy link. There we go. Cool. So you guys can have that and save it. You can follow along with us. Obviously, if you are interested in taking these VIP trade ideas, the more ideas we have and send out throughout the week, be happy to speak to you about getting you involved in the community. If you really want to take your trading to the next level here, if you resonate with the strategy, of course, that's what we want. Then yeah, we'd love to speak with you. Let's see. How many confluences you need to be met before you enter? Just as many as I can. Obviously we're looking for overall trend. We're looking for liquidity to be run. We're looking for imbalances to be filled. We're looking for supply and demand levels. We're looking for, just all that type of stuff. The more the confluences, the better. There's not a specific number, but the more that you can put together, the better. What do you think of pi ratio? It's going to be in prime numbers as periods the algo goes through to set long-term TPs. See, I don't really care about all of that because it's directly, what's the word for it? Projected on the price charts. So I don't care about all the bank algorithms. It doesn't matter to me. I don't care about, the exact amount of volume below or above a specific level. It doesn't matter to me because all of that is directly placed on the price chart. Because obviously if, the algorithms are saying to do one thing, then that's going to be directly, depicted on the price chart. And I just go based upon what I see on the price charts. So that's just what I was taught. I was taught the institutional, the way that they do it. However, in the form of actually trading, I had to be taught on price charts. Thank you guys for the love. I appreciate it. Thank you guys so much. You trade futures or mini contracts? I do not. What are your thoughts on round numbers trading like quarter theory? It's important to understand because when you're trading off of round numbers, these are where these institutions are looking to fill the most of their orders because there's more liquidity around those whole round figures. So that's why when you see price come into specific numbers, like I don't know if you're looking at Euro CAD at 1.5 or 1.450 or something like that. And I'm just making that up, but if you see price react off those levels, if those psychological levels are within areas of interest you're looking for, it's additional confluence because there's, these institutions are trading from these levels. They get their orders filled at round figures because there's more liquidity available at those levels. How do you plan your stops? What do you do when they are hits? I mean, I have my stop losses. It's just based upon the current setup of the market. It just depends on the current setup at hand. I would say, if you're looking at it, like for instance, AUD CAD, right? If you're looking at a sell to buy candle, right? Where would your entry be? At the open of that candle? Where would the stop loss be? At the low of that candle? If it's supply and demand levels, it depends on the setup at hand. And that's something that I can't give you a straight up answer for because it's different for every single setup. So it just comes down to practice. We teach it in our course material. We teach it in our YouTube videos. If you need just free content, it's our YouTube videos are free. If they're hit, well, then we just leave it. We don't re-enter unless there is another setup that meets our rules. Every single setup has to meet our rules. We have to have we have to treat each trade individually. So just because a stop loss is hit, if a stop loss is hit, that probably means it's now invalid and we move away from it. If there's another opportunity to get it, we don't trade because our stop loss is hit because we want to make that money back, right? If we're going to re-enter into a position, it's because the market may have hit our stop, but maybe has done something else to show us that, hey, look, there's another setup at hand I should take a look at. Hard to explain, but just treat each trade individually. When you lose, just move on. There's no need to revenge trade. So many people do that. That's why 99% of traders lose. You have to treat it like a business. You have to treat it like a profession. That's why one of the questions I ask on our meetings are, is this something you want to do full time, or is this a side hobby? If it's a side hobby, just quit. Really, you can't trade Forex. You can't invest as a side hobby. It's either you're all in or you're all out, because either you're making money or you're not making money. So you have to practice the habits of the professionals and do things absolutely correct every time, and treat it like an actual business or an actual career, or you're just going to end up losing at the end of the day. That's just kind of how I look at it. What do you think is better, swinging or scalping? Everything is the same. The markets are fractal. Everything occurs on every time frame. If you scalp, have an understanding of the higher time frame. If you swing, have an understanding of the higher time frame. Everything has to do with the higher time frame. You're just scaling into it. So you could have lower time frame trades. You could scalp, but not to say one thing is better than the other. The price is being delivered one way. It's just being delivered one way on different time frames, right? Demand and supply levels still need to be mitigated on the monthly time frame as they do on the 1 minute, right? So it doesn't matter what you trade, just whatever fits your personality, whatever fits your everyday lifestyle. But make sure that if you are scalping lower time frames, you still have a holistic perspective of the higher time frames. So very important. How do you manage when you have a trade and drawdown? I let it hit stop if it hits stop. There's nothing that's going to say, because when people, why do you have your stop loss in the first place? Is because you think that at a specific price point, it's best for me to get out of the market because I don't want to lose anymore. I'll just take the loss because I'm done. I want to get out, right? Because at that point, the market or that particular setup would be invalid. So if I'm in drawdown, that's why I have a stop loss. I don't care. If it's in drawdown, it's in drawdown. I leave it, right? If it hits stop, it hits stop. I leave it. The people who move stop while they're in drawdown, or they close trades too early while they're in drawdown, are people who are too emotional and probably shouldn't be trading. So good question. That's a really good question. But that's just my philosophy behind it. Set your entry, set your stop loss, and let it go. There's been so many times when I first started trading that I was in drawdown and my emotions were building and building, and I just closed out break even, and then the price went in my overall direction and I could have made money. Right? There's so many times when I first started trading that I was afraid of losing, so I kept moving my stop and moving my stop and moving my stop, and I just kept going and going, and I lost so much money. It blew my account. So that's why you have a stop to begin with. If it hits, it hits. If it doesn't, great, you're making money. Is entry always on a sell to buy or buy to sell candle? Sometimes entering on a mitigation of a mitigation. Yeah, it can be based upon, mitigation trains, sell to buy to sells, areas like buying regions or selling regions, meaning like supply or demand levels. Doesn't always have to be a specific candle, because what is a candle? A candle is very subjective to the time frame you're looking at. And we know time frame, price is being delivered one specific way. What's on the 1 hour time frame may be looking a little different on the 2 hour time frame, maybe a little bit different than the 45-minute time frame. Everything's being delivered the same, so it's just the way that you view it. It's your perspective. So that's why there's no such thing as the proper time frame to trade, right? Because everything happens in every time frame. It's just a zoomed in or zoomed out version of the exact same thing that's happening, right? So if we have like something like AUD CAD right here, I'll share my screen really quick. For something like AUD CAD, that is a clear candle. Like that this is the candle that swept liquidity. Let's just say there was a candle here and a candle here and a candle here, right? Or maybe, sorry, I can't, so you can see it. Well, which one is the sponsor candle? Many people would be like, oh, this is the sponsor candle, right? It's the last selling candle before the big move to the upside. Just because it's the last candle doesn't mean it's the sponsor candle. Where was the liquidity run? Where was the last overall selling volume? The last selling volume started right here. So that could be your sponsored move or your area of demand, because maybe there's supply, or let's say within this candlestick, I'm going to use bar replay here. We're going to go to the 15-minute time frame. Okay, so why isn't this the sponsor candle? Why isn't that? Just because it's the last candlestick doesn't mean it's the sponsored move. Where was the liquidity run? Where was the selling volume initiated? And it was initiated right here. So that's why time frame is all just perspective. It's the price has swept liquidity and we have moved to the upside. Whether you look at it on the 1 minute or the 1 monthly time frame, it's the same exact thing. What's going on here is the exact same on every time frame. So we have to look at it from a form of liquidity runs. Now this is very pretty because it's, a clear sell to buy candle that swept liquidity that has little to no wick. That's just pretty, right? But you're not going to have that be pretty every time. It could be something like, I don't know, Euro GBP, to where you may think that this is the sponsor candle because it's the last sell to buy, right? But why don't we scale in and go a little further? Well, maybe you think that this is the sponsor candle right there. Well, that's not a sponsor candle, never swept liquidity in the first place. And two, if you are to take this long from here, where would you want to do that, right? Price is being delivered one way. Yeah, sure, you could go right here, whatever. I mean, that's really not in premium or discounted price. You could go in here, which is the imbalance, or you could scale in and understand where supply and demand are flipped, right? Because you can see here, this is buying volume. We sold off, we pulled back into that supply, we failed and we ran higher. That's exactly why we had our entry right at that candle, because that's our last selling volume that reacted off supply. There's just a lot that goes into it, guys. It happened to be at a round figure, and that's why we got the wick entry. But for something like this, doesn't mean that this is the last, that's the sponsor candle. Doesn't mean that it's going to react off that. We have to understand it from a holistic perspective in terms of volume, liquidity, structure shift, supply and demand. So I would say my entries are based upon supply and demand and smart money. So sell to buy to sell candles or regions of candles. Now you could say that this is the last sell to buy candle. Well, you're like, okay, Nate, then why are you trading off of this candle? Just because it's the last sell to buy doesn't mean it's the sponsored move. Well, it kind of is, because we can see that we had the buildup of supply here, and this was the candle that opened to sweep the liquidity. I could go to a lower time frame and it would be the same exact region of price. I could go to the 20-minute. I'm just going to pull this out of my butt here, right? 20-minute time frame. And there's liquidity resting below here. I know that because I moved. Actually, I'll just do this. Play that out, right? Boom. Okay. Because there's liquidity resting below here, that is why that this level is not really valid. You could say, yes, this is the last selling volume. This is where the liquidity was taken before the trend shifted back to the upside. 8800. And in all reality, that's not a bad level. It's a psychological level. However, I have it a little lower because that's where the liquidity should be run from. This previous low should be run. So then I keep zooming out and zooming in. I can go to the 25-minute, see what looks better. Nothing really. 30-minute. Okay, that's a little bit better. 45-minute, we have imbalance. 1 hour time frame. Okay, clearly that's a really nice candle. Go to the 2 hour time frame. Not really. So 1 hour looks the prettiest to me. So it all just depends on a lot of different factors. Sorry if I'm confusing you guys. Maybe I just go on tangents, but that's kind of what I look for. AUD CAD is a pair that is derivative of AUD USD and USD CAD. I mean, sort of, yes. You're right. It's not going to be exactly the same because AUD CAD doesn't have the US dollar, right? So it can't be 100% a derivative of AU and UCAD. I mean, it is to a very high degree, but how do I become mentally fit in trading? Is one thing that could change the way in which I see the market psychologically. Yes, psychology is huge, guys. And this will be the last question I answer. I got to get going. We've been on for 2.5 hours. So psychology is huge, right? Us human beings, and I say this all the time, we respond to our environment, right? Whatever we see, feel, hear, taste, touch, whatever you want to say, our 5 senses, we respond based upon all of those senses. So our response is an indirect relationship with our emotions, right? Whatever we feel is how we react. So you could be the best trader in the sense like, you could understand the concepts perfectly, but if you're not mentally fit, then you could still be in a very bad spot. So, it just depends on how far you want to take that education. We do have a full in-depth psychology course that you can get involved in. However, if finances are a little bit of an issue, we do have sort of a surface level psychology series on our YouTube channel. You can check that out for free. But that course is probably, in my opinion, they're your best bet to go with. However, like I said before, I'm not a stickler for cash, guys. So if you guys want, that's why I do produce free value. That's why I do get on these live sessions. That's why I do produce these, psychology series on YouTube. It's all surface level stuff to a degree, but it is very valuable. So, you can check that out first if you want. I think there's like 4 or 5 videos. It does go over some problems that traders sort of don't realize that they actually do on a day-to-day basis. That could be the culprit to, their demise, their downfall, I guess you could say. Psychology is huge. That's really why a lot of traders fail. It's not because they don't understand the concepts, it's because they don't know how to control their emotions. And that's a big, big part, especially when you're trading with real money, right? Your money. When will the new course be released? I hope towards the end of this month, if not early February. So, all right, guys. Well, enjoy the rest of your weekend. I appreciate all of you for staying on for such a long time. It's been 2.5 hours. So thank you for the time today. We have the recording posted on the YouTube channel right after I end the broadcast here. If you have any other questions, feel free to hit me up at a later time. Be happy to help you in any way possible. And let's have another good week. Stay in tune with that track record. It's going to be updated as we go. Let's have another great week. We had 10% return in 1 week, which was last week because we started on the 9th. Let's try to make it another 10% week. All right, guys, take care. Cheers.